for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Vinus is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like the Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great, because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that one or two people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have two guys who are ahead of that and one knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean, but also
While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. This is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, an equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So, depending on when you tuned into Bloomberg today, you could be stocks are down, stocks are a little malaise, or they could be bouncing back.
Yeah, this morning it was we saw quite the decline, and then what ended up happening on the S&P 500 is just a little bit before 11 o'clock. The Washington Post reported that the Biden administration is considering a different kind of corporate tax rather than something at 28% or 35%. Like
got a little bit of
a floor, 15%.
That's low. That's a lot lower than certainly what the president was talking about earlier. Folks, it's Thursday, June 3rd, 2021. We are going to talk about the equity market. We're going to talk about a batch of mostly strong economic data. We'll get to that in just a moment. Millennials, though, falling behind, not so great for them. We're going to talk also about Tesla's fall, Tim.
Yeah, down 30%.
From its peak.
From its peak.
Yeah, it's been down a lot. And then we're going to finish up with a chat about beer because not Friday, but it's Thursday. It's Friday's Eve.
Any day is a good day to talk about beer.
Eve.
It has to be a day that ends in Y, Carol.
It is Tim's Friday, by the way. All right, let's get you going, though, on this Thursday with a check on that trading day. Here is Charlie Keller.
All right, thank you very much. Tesla shares, guys, just talking about that. We've got Tesla a little lower now by 4.2%. Among some of the meme names, what a turnaround for AMC Entertainment, up now by 5 0.5%, back on the plus side, spent much of the day trading lower. GameStop, though, remains lower by 4.4%. Has been a wild trading day. The S&P now down 9, drop there of 0.2%, worst level. Have been down by 40 points, down 1%. The Dow, a recovery there, up now by 29, up 0.1%. Again, at the worst level of the day. Had you tuned in earlier, you would have heard us telling you that the Dow was down 265. NASDAQ, though, remains lower, down 109, a drop of 0.8%. The NASDAQ 100 index also down 0.8%. Equities did pare back some losses after a report President Biden may be open to a lower corporate tax rate than 28%. 10-year yield now 1.62%. We've got gold down 1.9%. At $18.72 the ounce, West Texas Intermediate crude down 0.2%, 68.66 a barrel. Very briefly, among the airline names today, Delta now lower by 2.7%. Delta did say today that it does expect U.S. corporations to reopen for business no later than Labor Day and resume domestic travel at levels from before the pandemic by July of next year. I'm Charlie Pelletan. It's the Bloomberg Business Flash.
All right, Charlie, thank you so much. It is time for the Market Drivers Report. And let's set the Business Week agenda on this Thursday. Dave Wilson, stocks editor at Bloomberg News. He is with us in our Interactive Broker studio. On the phone in New Jersey, Geeta Ranganathan, technology and media analyst at Bloomberg Intelligence. She's going to set the record straight when it comes to fundamentals and AMC. But first up, Dave, take it away.
Oh, man, you've got to start with AMC. Consider that, yesterday the stock was up 95%. Overnight, it rose as much as 24%. Then they came out and said they were going to sell 11.6 million shares. AMC at one point was down 40%. Well, turns out the company sold all the shares, raised $587.4 million, and now it's higher.
By 7.8%.
Yeah, I mean, you talk about volatility.
Yeah, exactly.
And absolutely. I mean, beyond that,
still has billions of dollars worth of debt. Still almost 19% is shorted as a percentage of float. I mean, who knows which way it moves next, Dave?
No, absolutely. And in fact, I mean, AMC putting in the prospectus for this share sale, in short, if you're buying this stock, you better be prepared to lose a lot of your money or maybe all of it.
Did they actually say that?
They did.
Yes, they
in
did.
The 8K this morning.
Yeah, and it was right there in the prospectus for the share sale.
Yeah.
Okay. Tim Stenovic, I consider you pretty smart. Dave Wilson, I consider you pretty smart. You read that in a perspective. What do you do?
Well, I think it's to me, the alarm bells went off in my head thinking to myself, well, this is a company that's covering itself, covering its tracks. It's making sure that it doesn't have liability because it is building this relationship with
a lot of what
traders.
goes into these kinds of documents, has that. Think about there's a whole section called
S1?
risk factors.
Yeah. Right.
But it's another thing to put it on the front page of the document in bold type, and that's what AMC did.
It's like a neon sign.
I would imagine lawyers. I would imagine lawyers had something to do with that too.
Yeah.
Well, let's bring in Geeta Ranganathan because she's our tech and media analyst. She follows companies like AMC. Geeta, is there a fundamental story behind owning AMC right now?
The short answer, Carol, is no.
That's a short one.
Yeah, I mean, this stock is completely out of sync with fundamentals. So, it's in the movie theater business. Of course, they are the largest theater chain across the world. But if you just kind of look at the movie business, it's been in secular decline. I mean, movie going has been in secular decline for a long time now. And just with the pandemic, you have Hollywood, which is moving towards a streaming-focused future. And kind of how movie theaters fit into that future is yet to be determined. So fundamentals are pretty weak. And I actually ran some back-of-the-envelope math just based on fundamentals. So if we were setting the stock price of this company just based on fundamentals, it should be at about $7.
It's $7 and right now trading at $67.
Yep.
Geeta, I'm wondering what you make of the idea of selling so many shares, diluting, shareholders because that's what happens when you have the opposite of a stock buyback, and seeing the stock price actually increase like it's happening right now.
I mean, I think, Tim and Carol, that the company has totally embraced this, that they're embracing this frenzy, and they have totally leaned into it, and they are actually cashing in. I mean, I credit management with being really, really smart. Mm-hmm. They knew that they were getting into a really difficult situation with the pandemic. They're burning over $120 million every month. in cash, just because of the money that they're losing, not being able to play any movies, not having any people come. And so they've really kind of, this was a company that was teetering on the verge of bankruptcy. So they've really leaned into this. They've been issuing shares to bolster their cash reserves. And today's, share sale, again, is a great example of how they really kind of cashed in on that price surge from yesterday. And so right now we have their share count at about 513 million, which is over 10 times what it was just 8 months ago.
Wow. It's like, welcome incoming class to the Harvard Business School, and we're going to do the case study. It's all about meme stocks.
That's
and
where
we're
the
going to talk
CEO,
about
Adam
this.
Aaron, went to business school.
Yeah, absolutely. And AMC raising $1.25 billion of cash this quarter through share sales. And, think about that $120 million a month burn rate. You're talking about a year's worth of cash they've managed to raise in 3 months.
How much debt, though, still on that balance sheet?
Oh, billions.
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 Yeah.
5 billion last I checked.
So, Geeta, what's the miracle story here? I mean, that this company has leveraged longer term. Is there one?
So, they're doing the right thing that they can do right now with all of these share sales. But you have to remember, the fundamentals of the business are not great, and their capital structure, their balance sheet is definitely in a pretty precarious position. So they have about $5.5 billion in long-term debt, and they have $5 billion in operating lease liabilities. If they're able to issue more shares, and they will have to go for a shareholder approval, if they're able to issue maybe another 100 million, 200 million shares, they can probably clean up their balance sheet and at least bolster their cash positions to kind of really come out on top after this whole pandemic fiasco. Yeah.
Well, listen, so glad we got to check in with both of you on this. Geeta Ranganathan and our Dave Wilson, who'll be back a little bit later on. All right, we do have to do the bite of the day.
It's one number that tells us a lot, brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Tim, today's number is 200. It is World Bicycle Day, and to mark the occasion, Lawn Starter ranked the 200 best biking cities. San Francisco rolling in at number 1, Washington, D.C. finishing 7th, Boston 10th, New York City managed to sneak into the top 20 at number 19. Pulling up the rear at number 200 was Baton Rouge, Louisiana. And they looked at length of bike lanes, the share of workers who bike to work, access to bike stores and repair shops. Research also taking into account air quality, weather, and availability of biking clubs in each city. You like to bike.
I like to bike. I like to bike home from work. I use City Bike. I love it. New York City has gotten a lot better.
It has gotten a lot better over the last decade.
It really has.
Right, there's space for them now on the roads. All right, folks, we've got a lot coming your way in just a few hours. In the meantime, let's get a check on world and national news. A lot going on there with Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, the White House is outlining plans for sharing vaccines to countries all around the world. National Security Advisor Jake Sullivan says 25 million doses will be going to foreign countries across Asia, Africa, and Latin America.
Our goal in sharing our vaccines is in service of ending the pandemic globally. Our overarching aim is to get as many safe and effective vaccines to as many people as fast as possible. It's as simple as that.
Sullivan reiterated that the administration will not use vaccines to secure favors from countries. He says 75% of the supply will be going to COVAX, which provides equitable access to countries all around the globe. Bloomberg has learned that President Biden will be signing an order today amending a ban on U.S. investment in Chinese companies. It's a ban that began under former President Trump. It is expected to name 59 companies with ties to China's military or to the surveillance industry, including Huawei Technologies. Bloomberg's Treasury reporter Saleha Mohsen explains the purpose of the changes.
The essence of it is national security protection for investors from these companies, and also a signal to China that just because Trump is gone does not mean the U.S. is not going to be tough on China.
Mohsen says the ban on investments will take effect August 2nd, and investors will have 1 year from that time to fully divest. SpaceX launched thousands of tiny sea creatures to the International Space Station today, along with a plaque-fighting toothpaste experiment and powerful solar panels. The shipment is expected to arrive on Saturday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. I'm Carol Massar along with Tim Stanovic. Did you see this? New York City seeking to boost young people's vaccination rates. Some venues set to offer a shot-for-shot in a city campaign to target nightlife spots. COVID-19 vaccinations in New York State declining to less than 1,000 for the first time since October. So you want a shot? Get a shot.
Taking a page from your home state's book, because New Jersey has been doing that for weeks.
We know how to drink?
Yeah, you guys have been doing a shot for weeks now. Global vaccinations, if we're keeping track here at Bloomberg, they have reached 2 billion. That's slightly more than 6 months into the campaign, though much remains to be done in places like India and in Africa. The White House unveiling a list of regions that will receive the first shipments of unused vaccines from the U.S.
Yeah, and much remains to be done, including in parts of the world such as Africa. New York City, anxious, though, to, like we said, get younger folks to take the vaccine. We have a great story coming up in Bloomberg Business Week. It's also the big take, I believe, today. And it talks about that if we really want to get beyond the pandemic, we have to vaccinate the world, and we have to make sure the organization like COVAX has access to the vaccines it needs to get to those emerging markets. That because as long as the vaccine is in this world, there is the opportunity and possibility and likelihood that we will continue to see variants pop up, and we could get ones that are much more serious, believe it or not, than what we've already gone through, and that would then potentially create another wave for those of us here in the U.S. and elsewhere.
Yeah, and the ultimate concern is that some sort of variant or mutation develops that can break through the vaccines in a way that would render these vaccines significantly less efficacious, because the mRNA vaccines particularly have been shown to be incredibly efficacious against variants that have developed thus far, but that could change.
We were talking earlier, we were taping some stuff, and it was like, I feel like the vaccine to some extent is like kryptonite, right?
It really does feel like it.
It just does.
I told you this already today, Carol.
Yeah.
I'm going out to dinner for the first time inside a restaurant tonight.
It's a big deal.
It's starting to feel like things are really getting back to normal, but we have to remember, outside of the United States, it is a completely different story.
And we need to approach the pandemic, and this isn't me, but this is health experts saying it, that it's a global pandemic, and that means it needs global solutions and global cooperation. We're going to dig into this in just a moment with the team over at Johns Hopkins. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Just turning negative, giving up earlier gains. The Dow now down by 2 points, joining the S&P and NASDAQ on the minus side. Equities pare back some of the losses after a report President Biden may be open to a lower corporate tax rate than 28%. S&P this morning rose from session lows after the president is said to have pitched a 15% minimum tax on U.S. corporations to Republicans as a way to fund a bipartisan infrastructure package. So here's where we stand. The Dow now down 7 points, down less than 1/10%. S&P is down 13, a drop of 0.3%. NASDAQ is down 120, a drop of 0.9%. 10-year yield 1.62%. Gold is down 1.9%, 18.73 the ounce. And West Texas Intermediate crude down 0.2%, 68.69 a barrel. Among some of the names reporting after the closing bell today: CrowdStrike, Broadcom, DocuSign, and Slack Technologies will be all over those earnings. That's the break. Again, recapping stocks now mixed. Dow up by 0.5 point. S&P down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, got it. Thank you so much. Well, U.S. infectious disease expert Anthony Fauci saying it was possible the world would never find out the precise origin of the coronavirus pandemic. We know President Biden just last month ordering a new 90-day review from the intelligence community about the possible origins of the virus. So, Tim, we've got that going on. Then we've got the Bloomberg Big Take about how the world's best hope to end the pandemic really just needs more doses.
Yeah, and here to help us dive into all that and more is Daryl Gaskin, professor of health policy and management at the Johns Hopkins Bloomberg School of Public Health, joins us on the phone from Maryland. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Professor Gaskin, thanks so much for joining us. How are you?
I'm doing well, and how are you doing?
Doing well, thanks. How important is it that we actually find the origins of the coronavirus?
Well, I think with regard to finding the origins of the coronavirus, I think it's more important that we know what the virus is and how to treat it, as opposed to just finding its origin. And I think we've done a pretty good job in terms of mapping the DNA of the virus itself, and then developing vaccines to try to combat the virus. So I think that's really the major thing that we ought to be doing, and then subsequently learning how to treat the virus.
Right, exactly. And we know the toolkit has certainly, it's a lot more full than it was about 12, 13, 14 months ago. Having said that, at the same time, the past year, as you know, Professor Gaskin, that the pandemic really revealed once again all the inequities that are out there in terms of how healthy the U.S. population is. Some really healthy, some not. Some have great access to amazing health care, some do not. This is something that you look at really closely. Have we learned enough this past year that we're going to get smarter about making sure that people are healthier going forward, and that more people have great access to good health care?
Well, I think what the pandemic has done is it's revealed that there are some real problems with health equity in this country, and those problems have persisted for decades. There's a historical report by the Heckler report, which was published in the 1980s, which documented the disparities. And then there's a report that was called Unequal Treatment that was published in the early 2000s that documented these disparities. So from a researcher standpoint, we've known about it for a while, but I think from the general public standpoint, they haven't realized how severe the problem is. And then also the impact of this problem, that it's just not something in which affects your neighbor, but it really affects our entire society.
How do we get to a place where we learn from the mistakes of our past and actually fix this on the other side of the pandemic? Because it seems like this could be another instance of us recognizing something, but then policymakers not having the political will to actually accomplish something.
Yeah, it's really quite a thorny problem. I mean, we should all be sort of just moved by the fact that there are people who are unhealthy through no fault of their own, often. And morally, that should be something in which we should be willing to take on. But not only is it just morally unacceptable, it's also economically. It's just costing our society just a lot of money in terms of taking care of people who are sicker, and then those individuals, their ability to contribute to our society is curtailed and compromised. And then also the fact that people are not living as long as they should. And so all of these things impose significant costs on our society. So even if you're not willing to address these problems because it's morally the right thing to do, we should want to address these problems because it's really sort of a real drag on our economy.
Exactly. Hey, we just got about a minute or 50 seconds left here. How do you, though, unwind what's become such a business machine that is our healthcare program and our healthcare industry, to be fair? Because there's a lot of money that's to be made when people are sick versus maybe keeping people from being sick. So how do we unwind that? And just kind of quickly.
I think we have to be willing to say yes and no at the same time. We spend a lot on healthcare, but we just spend it on the wrong things. I mean, we really want to spend a lot on tertiary care, but not a lot on primary and preventive care. I mean, there are providers that are providing these services, but if you look at what we pay them relative to what we pay specialists, and then in addition, we spend a lot on healthcare, but not a lot on public health. And this crisis, if we were much better prepared public health-wise, we could have maybe averted hundreds of thousands of deaths if we just would have had the systems in place to monitor, track, and then isolate this virus.
Sounds like we can just start working on it for the next one, because most people say there'll be one.
What I'm concerned about is we won't even have those things in place for the next one.
Exactly, and we'll go through something very similar. Professor Darrell Gaskin, thank you so much. Professor of Health Policy and Management at Johns Hopkins Bloomberg School of Public Health. With us, of course, on the phone from Maryland, the Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. But you do wonder, do we learn anything out of this?
We have short memories. We really do.
It's troubling. You're listening to Bloomberg Business Week. Coming up, the day's economic news and the Biden administration and corporate taxes. Maybe a little bit of a change.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So how many times did you check out the Top Eco page today?
A lot, especially at around 8:15 this morning, and then again at 8:30.
Right, and then again at 9:45 and 10 o'clock.
I was on air.
Yeah, oh, that's right, you had to do that.
Yeah.
That thing. Over at Quick Take. Hey, listen, we did have a bunch of economic news on the labor market, upbeat news, also on the services industry, so important to our economy.
Yeah, we're going to be talking to Michael McKee, international economics and policy correspondent here at Bloomberg News in just a few minutes. In the meantime, let's get a check out the trading day with Charlie Pellet. Hey, Charlie.
Thank you very much. Taxes, geopolitics back in focus amid Fed taper talk. Right now, the S&P down 11, a drop of 0.3%. Equities paring back some losses after a report President Biden may be open to a lower corporate tax rate than 28%. The Dow spent much of the day higher, now down 4 points, little change there. NASDAQ is down 117, down 0.9%. The NASDAQ Composite Index also down 0.9%. 10-year yield 1.62%. Gold is down 1.8%, $18.73 the ounce. And West Texas Intermediate crude lower, a little change now, down 0.1%, $68.78 for a barrel of WTI. The United States government is going to be sending 25 million COVID-19 vaccine doses to other countries across Asia, Africa, and Latin America. The first time the Biden administration has shared shots it could have used at home. An issue for policymakers has been the issuing of so-called vaccination passports. You get the shots and then you get the freedom to participate in a wide range of everyday activities. New York State, for example, has its electronic Excelsior Pass app. Dr. Jennifer Nuzzo is senior scholar at the Johns Hopkins Bloomberg School of Public Health. She says it is a thorny issue.
We know that many of the people who haven't yet been vaccinated, it's not because they don't want to, it's just that they haven't been able to. And in part because it's harder for them to get. They may not have time off from work. It may be not as many options in all places where people live. And so, we also have to be worried about what we restrict people from doing if they haven't been vaccinated and whether that's worth it in the long run.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we follow, Pfizer up 0.3%. Its German partner, BioNTech, its ADR is down 1.2%. AstraZeneca's ADR is up 0.5%. Moderna up by 3.3%. Johnson & Johnson down 0.3%. Again, recapping, equities lower, S&P down 12, ahead of the jobs report tomorrow morning, bright and early, 8:30 a.m. Wall Street time. S&P down 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we did have a batch of economic news today. We want to go through it because we had a bunch on the labor market, also on services, and then we've got the president talking about taxes and the corporate tax rate.
Yeah, like a lot of stuff going on, especially ahead of tomorrow's monthly jobs report.
All right, let's get to it with Bloomberg News international economics and policy correspondent Michael McKee. Tracks it all. He's with us on the phone in New York City. All right, Mike, go through it. I was watching you. Tim was watching you too on TV this morning. What do we need to know? Was it net pretty positive data, to say the least?
Gee, I hope I passed the audition.
You did. That's why you're welcome back right now.
Mike, your badge still works.
Great. It was positive. The ADP employment change, 978,000. The survey had suggested 650,000. It's not a very good predictor in terms of the absolute numbers of jobs that were created, but it does give us an idea of magnitude and direction, and it suggests that maybe we have a little bit stronger job creation coming tomorrow than the general consensus has been. One of the things about the ADP number is they found 440,000 new jobs in the leisure and hospitality sector, which is not a surprise in the sense that that's the sector that was hit the hardest. But then we got the ISM Services Index, which hit a record on its headline number, 64. But the jobs number went backwards a little bit, still expanding, but at a slower pace. So it will be interesting to see which of those two indicators give us the best prediction for what happens tomorrow.
What's also interesting is that I feel like so many people have come back and say, listen, all those, unemployment benefits are keeping people from going back to the hospitality industry. And yet those, often jobs reports that we're getting showing that, no, that's where people are going back to work.
Well, it's going to take a couple of months to get a clear read on what's going on. Charlie was just talking about people who may not be vaccinated yet. And that's part of the issue is, did you get vaccinated? Do you feel comfortable that people you're going to be interacting with have been vaccinated? If not, you may stay on the sidelines. There's a question of whether or not people stayed home because their kids were still out of school. And then the question of the unemployment benefits, whether they're too generous or not. Now, we did see jobless claims fall to 385,000 last week. That was the lowest since the pandemic began. So we're seeing improvement there, and it may presage a larger increase in jobs accepted going forward.
Michael, what was really interesting was the equity market reaction because the S&P 500 early in the day was down by nearly a full percentage point, more than 40 points. And then the Washington Post reported that the president has pitched this 15% minimum tax on U.S. corporations to Republicans as a way to fund a bipartisan infrastructure package. And then we saw the equity market react in a positive way because, hey, less taxes, that means more profits.
Yeah, it's kind of interesting that the markets did that in the sense that Biden, as far as the reporting goes, didn't say he wouldn't ask for the 28% increase, the increase to 28% that he had wanted for business taxes, but that he might ask for it in a different forum. He might do that through the reconciliation process they probably going to have to use for many of his plans. But in terms of infrastructure, he is talking about the 15% minimum tax, which is the proposal the U.S. has made to the rest of the world, and stands a good chance of perhaps being accepted.
Yeah, pretty interesting. Hey, listen, one last thing, Mike. There's a story on the Bloomberg, or Olivia Rockman putting it out there. Economists brace for another volatile monthly U.S. jobs report. Dun, dun. Like, what are you expecting? Is it going to be maybe another off the chart? And if it's another surprising number, why is it so tough to get right now?
Because there are no models that fit what's going on. The number of jobs that were lost was so many.
Yeah.
And the number of jobs that have been regained, it's very hard to get any kind of fix on what's going to happen. I think I'll do the jobs report from under Tom Keene's desk tomorrow because you don't want people throwing things at you if the numbers are bad.
Hey, you economists like weathermen, you guys can get it wrong one time after another, and yet you still pop up. I'm just going to say, Mike.
It's going to rain tomorrow, Carol.
Well done, well done. Well, we'll be listening to you very, very closely, as always. Michael McKee, international economics and policy correspondent at Bloomberg News, on the phone in New York City. Listen, it was a major miss, that April employment report, and a lot of economists were blindsided. But Mike makes a good point. There's no models. There were so many jobs lost. There's so many different moving factors. Maybe it's hard to get a real good grasp on.
So the number that economists are expecting tomorrow, according to the Bloomberg survey, 674,000. Remember what we saw last month was 266,000. Estimates were for around 1 million.
Yeah, so we'll be looking and watching closely and then seeing what kind of market reaction, because that will certainly shape what people think maybe the Fed might do sooner rather than later and determine what might happen with interest rates.
Lower for longer?
Lower for longer. Listen, the Fed said they're going to be patient.
Yeah.
We'll see. All right, let's get back to world and national news. Over to Nancy Lyons. She is in our 99.1 newsroom in the nation's capital in D.C. Hey, Nance.
Hey, Carol. The U.S. is moving forward with a plan for sharing vaccines with the rest of the world. White House COVID-19 response coordinator Jeff Zients.
Having successfully secured enough supply of vaccine for Americans, we are donating surplus U.S. vaccine supply and encouraging other countries with surplus supplies to do the same.
Zients says the first 25 million doses, about 19 million, will go to COVAX, which is run by the UN. The remaining 6 million will be directed to U.S. allies and partners. Scores of countries have requested doses from the U.S., but to date only Mexico and Canada have received a combined 4.5 million doses. Well, ransomware attacks have crippled U.S. businesses of late, and now the White House has a message for corporate leaders.
Deputy National Security Advisor Ann Neuberger's memo includes a stark warning for businesses to review their continuity of operations plans and update and patch their IT systems regularly. This after cyber attacks have impacted Colonial Pipeline, global meat producer JBS, insurance firm CNA Financial, even a ferry authority in Martha's Vineyard. The White House says it's expanding its cryptocurrency analysis efforts to pursue criminal transactions, and it's reviewing its own ransomware policies. In Washington, I'm Amy Morris, Bloomberg Radio. Radio.
Details are being firmed up for President Biden's trip abroad next week. He'll meet with British Prime Minister Boris Johnson and Queen Elizabeth for his first overseas trek as president. He'll also take part in the G7 summit in the UK before heading to Belgium for meetings with NATO and the European Union. And then he'll meet with Russian President Vladimir Putin in Geneva, June 16th. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So it's almost summer. We are certainly seeing it around here, Bloomberg. Summer internships.
So much better than last summer. So much better.
Not virtual.
Yes, exactly. When so many interns, recent graduates from college, people who were in between years in college, were doing this over Zoom.
Yeah, exactly. But we are seeing a lot more in-person programs. Goldman Sachs, JP Morgan, they're among the banks with in-person programs. And firms are really pushing for broader workforce to return as New York City reopens. But that includes interns. But it's a little bit different because there are daily health checks and recommendations for masking up depending on where you are.
Yeah, great story by our own Jenny Serrain all about this. For Wall Street's largest banks, the return of interns marks the start of a get-back-to-normal summer as the COVID pandemic ebbs in America. Goldman Sachs, for example, is seeking to have U.S. employees back to the office by mid-June. JP Morgan workers will follow suit a few days later. New York itself is livening up with the return of 24-hour-day subway service and the reopening of bars and restaurants at full capacity.
Yeah, exactly. I mean, listen, in terms of the city overall, if you take a look around, it definitely feels a lot better than it did a couple of months ago, even a couple of weeks ago. But only about 18% of the New York metro area's office workers have returned, according to security company Castle System. And finance firms, including Bank of America and Citigroup, have opted to keep their internships virtual. So it's not just, kind of one direction for everybody. I think individual firms are finding out what works for them, essentially.
Yeah, and I think there's still a question of what New York looks like on the other side of this. And this is, of course, a New York-centric story, but you can check the MTA turnstile entries total in the terminal. It's one of my favorite charts to look at, and it shows that we are just above 2 million riders per day on the subway, down from pre-pandemic above 6 million. So there's still a lot of room to get back to normal there.
What's interesting, it's not just a summer job, these internship programs. I know Bloomberg interns, they end up writing stories, they're reporting, like almost from and getting hired. It's often, we see a lot of these folks become regular employees at some point after they graduate. So the apprenticeships at these big banks, it's a really coveted spot. Banks have been known to hand out acceptance letters to less than 2% of applicants. So wow, it's competitive. You're listening to Bloomberg.
Hello traders, are you ready to trade Bitcoin? I'm going to place an order right now to sell short Bitcoin. The price I'm looking to sell, 38,855. Okay, 38,855. Please don't forget, if you see that the order is far away from the actual price, it is not, because first of all, this is 1 minute chart, and another thing is that these days Bitcoin very volatile, so it's better to place order before probably half an hour or 10 minutes before it will get to the right level. So if you want to trade Bitcoin, if you want to copy my trade, please follow me and we'll go through this trade. So right now I placed an order to sell short Bitcoin at 38,855. Okay, I'll speak to you later, guys. Stay safe and watch me what we're going to do. I will explain to you everything what I'm going to do next. Okay? Stay safe.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Down Thursday ahead of the jobs report tomorrow morning. Equities have pared back some losses after a report President Biden may be open to a lower corporate tax rate than 28%. S&P rose from session lows after the president was said to have pitched a 15% minimum tax on U.S. corporations to Republicans as a way to fund a bipartisan infrastructure package. S&P lower now by 14, a drop there of just about 0.3%. NASDAQ is down 128, down 0.9%. The NASDAQ 100 index also trading lower, down 0.9%. The Dow is down 24, down 0.1%. At the worst level of the day, the Dow had been down 265 points. 10-year yield 1.62%. Gold at $18.73 the ounce, down 1.9%. West Texas Intermediate crude down 0.2%. 68.68 a barrel. AMC Entertainment Holdings shares, they are now lower by 6.5%. AMC dizzying investors today by losing 40% of its market value, then regaining most of it while pocketing more than $500 million in fresh cash by exploiting the frenzy over the stock. Again, recapping stocks lower, S&P down 13, a drop right now of 0.3%. I'm Charlie Pelletan. This is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We want to get to the Bloomberg Big Take. It's an exclusive story that you definitely need to know about. This one from our Bloomberg Business Week team about the world's best hope to end the pandemic. Tim, it comes down to needing more doses.
It certainly does. Joel Weber is editor of Bloomberg Business Week. Stephanie Baker is financial investigations senior writer at Bloomberg News. Joel is in the Bloomberg Interactive Broker Studios with us. Stephanie is on the phone from London. Joel, COVAX.
Which is maybe a term that not everyone's familiar with. But it is a global organization that is in charge of basically getting vaccines to the places that would need them. And that's not always rich countries. In fact, it's usually every other country that doesn't maybe have the resources of the United States of the Americas.
Well, it's arguably, as Stephanie and her colleagues write, the most complex international peacetime operation ever attempted. How is it doing as of now with securing enough doses to distribute to the world?
Not well. It's been short on money and doses, and that's where we can bring Stephanie in. Because this is not they've been saying this actually for going on a year now, that they're going to need doses and money to actually get people vaccinated outside of the developed world. And that message is maybe finally breaking through. And to what can we attribute that, Stephanie?
Well, I think that now that developed economies like the U.S. and Europe have advanced their vaccination programs, and they are looking at, the end, or the pandemic coming to a close or coming under control, looking around and realizing, the world is not going to return to normal unless we get this pandemic under control in other parts of the world, because, we're not going to be able to travel, and there's this risk of variants being created in countries where the virus is circulating. The more infections you have, the more likely you're going to have these variants. And there's concern that, the vaccines may not work as well against all these variants. And if that happens, that could, those variants could boomerang back, and we could be back to square one in places like the U.S. and the U.K. that even have high vaccination rates. So, COVAX has really been set up to try to at least provide a baseline of coverage for poor countries that can't afford to buy vaccines on their own to, provide protection and immunizations to healthcare workers and the most vulnerable. But obviously it's been underfunded, and I think the main reason why is it didn't have enough money early on in the pandemic to be competing with rich countries that were placing big orders with the promising vaccine developers.
Stephanie,
they were behind the queue.
We were talking about your story earlier with Daryl Gaskin over at Johns Hopkins. Why wasn't there more planning and consideration up front to making sure enough vaccines were there for less developed countries, for those emerging markets? We knew this was going to be a problem.
Right, and the people who set up COVAX, Seth Berkley, the head of this nonprofit called Gavi, and Richard Hatchett, who runs a research and development outfit called CEPI, they realized that this was coming down the pike, and so they set out to raise money to do this back in May 2020, and the money came in very slowly because countries were consumed with their own problems, trying to find vaccines for their own populations, and really didn't step up early enough. On top of that, we have a global shortage of vaccine manufacturing capacity going into the pandemic. Before COVID hit, we had a capacity to make about 5 billion doses of vaccines globally, including 1.5 billion for flu. So we're now trying to more than double that. So that is part of the problem. And, we didn't know which of these vaccines were going to work. And, trying to do tech transfers and get manufacturers up to speed is incredibly difficult and complex, especially with new vaccines that have been developed.
How much of an issue in hindsight, and I think we can say hindsight right now in the developed world, is hoarding of vaccines? I interviewed the Prime Minister of Jamaica back in January, and he accused rich nations of hoarding vaccine doses and not making them available to other parts of the world.
Well, yeah, and that is basically what has happened. I mean, the U.S. has ordered, I think, about 3 times what they need to cover their population. The U.K. has done, similar orders. So they're occupying places in the manufacturing queue, and that creates problems for other countries trying to strike deals. So, obviously that is happening now. The hope is that, once we get the surpluses start to come through, those dose sharing arrangements will increase. I mean, in the U.S., you have a gap of about 70 million now between doses delivered and doses administered. There's a glut of vaccines in the U.S. Biden has just announced that he'll share 25 million doses of vaccines globally, most of that through COVAX. But in the grand scheme of things, that's like a drop in the ocean. They need a lot more. COVAX is 190 million doses short of where they hope to be by June, and that is mostly because they were hoping and relying on the world's largest vaccine manufacturer in India to make, hundreds of millions of doses. And now India, because of its second wave, has put export controls on the vaccines produced there, and that has left the world with a huge supply gap.
I think that Biden news is actually significant because it underscores sort of the whole point of Stephanie's story, which is COVAX has been under-resourced, underfunded from day one, and then, a meager gesture of 25 million, better than zero, which was what was there before.
Right.
But it's still, just millions and millions off of what COVAX is going to need.
Yeah, and I guess I just assumed, well, it's interesting, you do wonder about the major pharmaceuticals role in all of this. And again, I know that there were production, limitations, but, I guess I would have expected, Stephanie, that the big pharma companies would have been maybe a little bit more helpful.
The thing that has always struck me is that the two leading developers, Pfizer and Moderna, did deals with COVAX very late. Pfizer's deal was very small, 40 million in January. Moderna's only came in May, and most of those doses will only be delivered to COVAX towards the end of this year and next year. And I can't believe neither of them have just given doses pro bono to this effort.
Right.
I mean, given how much they are making off of these vaccines. I'm surprised people haven't called them out for that.
Well, as someone in your story, there's a quote, it's a global pandemic. We need a global solution. That's the only way we get beyond it. Great stuff. Stephanie Baker, it's our Bloomberg Big Take. It's a Business Week story. She's financial investigations senior writer. On the phone from London, Jill Weber, editor of Bloomberg Business Week in our Interactive Brokers studio. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Tim and I, we're going to be back on Business Week. If you're listening on Bloomberg 106.1 in Boston, Bay State Business. That's coming up next.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Phillip. We move into the final hour of trading on this Thursday, June 3rd. We've got the Dow, the S&P, NASDAQ, all declining right now. It's been a volatile session for stocks. Let's get right to the numbers. We'll give you some color on it in just a moment here. S&P now down 15, drop right now of 0.4%. The Dow is down 27, lower by 0.1%. Have been down 265 points. NASDAQ lower by 135, down 0.1%. The NASDAQ 100 index down 1%. Russell 2000 down 0.7. Dow Transports down now by 0.4%. Equities pared back some losses after a report President Biden may be open to a lower corporate tax rate than 28%. S&P did rise from session lows after the president was said to have pitched a 15% minimum tax on corporations to Republicans as a way to fund a bipartisan infrastructure package. There's more good news on America's labor market ahead of tomorrow's monthly employment report. Weekly jobless claims hit a new pandemic low of 385,000, and payroll provider ADP reports businesses added almost 1 million workers in May. So given those jobs numbers, what should we be expecting in tomorrow morning's jobs report? Neela Richardson is chief economist at ADP.
I think the estimate is going to be stronger than we saw last month. If you look at the ADP report, you see the gains exactly where you expect to see those gains. That is in consumer-facing service sector jobs. For those jobs, private payrolls were 440,000. For jobs total for the month, 987,000.
U.S. airline stocks are trading lower today on new geopolitical tensions. Shares of UAL down 3.8%, American Airlines Group down 3.2%, Delta down 3.3%, Southwest down 4.2%. And that's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic along with Carol Masser in the Bloomberg Interactive Broker Studios in New York. Bloomberg Business Week is brought to you by BNY Mellon's Pershing. Insight is a virtual and free beginning June 8th. Learn how Insight's content will leave you ready to lead effectively and think differently. Register now at bnymelloninsight.com.
All right, this is a little depressing. It is our second most read story on the Bloomberg in the past 8 hours. Millennials at the age of 40, Tim, they are falling behind their parents in every way. Is this your group?
This is not only is this my group, but I felt personally attacked when I saw the term geriatric millennial in this piece.
Who's been telling my story?
Because that is me. I am a geriatric millennial.
That is like a mean term.
It's an official term.
All right. But listen, this talks about, though, how millennials at the age or the older, the geriatric millennials, really running out of time to build up wealth. Let's get to it with Katerina Saraiva. She's Bloomberg News Federal Reserve and economics reporter on the phone in Dallas. As I said, one of the most read stories on the Bloomberg. Katerina, tell us what you guys sought out to do in this story and what you found out.
Hi, yeah. So, we thought it was really interesting that the older millennials are turning 40 this year. Of course, these are folks born in 1981, and this generation has been, talked about a lot in the past 10 years or so. There's been a lot of kind of angst about whether all millennials are still living with their parents and so forth. So we thought it would be kind of interesting to take a look, and we looked at a variety of kind of wealth statistics and just numbers around this, and really found that this generation is very far behind where their parents and grandparents were in terms of things like home ownership, debt levels, kind of these key elements to wealth.
Why is that specifically? Is it because of when we graduated from college into a few years later, the Great Recession? Is it because college was so expensive for us? Is it because wages haven't grown as much as they were growing when our parents were our age? Is it all of the above?
Yeah, it really is all of the above. It's a lot of different factors coming into play. And yeah, like what you're saying, college was a good bit more expensive for millennials. They therefore incurred a lot more student debt, and that debt has really stayed with them and prevented them in many cases from doing things like buying a home, which is such a key way to build wealth. And then, like you're saying, wages really haven't risen that much during millennials' adult years, not nearly as much as for their parents. And then conversely, things like home prices have really shot up. So it's really created kind of this much more uneven environment for millennials.
Yeah, it's pretty staggering, some of the stats that you have come out there. But you also talk about, there's like a cover page to all of this. A year of college for millennials was, and I guess on average, $24,600. For boomers, it was less than half that. Cost of a home, $328,000 versus $216,000 for boomers. Middle-aged net worth, 91,000 for millennials, 113,000 for boomers. It doesn't feel like, in some instances, though, Katerina, that much. But we have to remember that wealth creation, even a few $1,000s over time, adds up to a lot.
Yeah, exactly. It's kind of like this multiplier effect, right? And especially with what home prices have done in the past few decades, the earlier or the sooner you're able to get in, the better, because it's just going to multiply and multiply. Also things like, stock ownership, savings rates in general, these things it's all lower. So when you add it all up together, it creates, a bit more of a dismal picture.
So based on your reporting, who you spoke to, and you've done so much reporting on this, Katerina, what is the message for policymakers here? What is the way to prevent this generation, my generation, from a fate that's not so good?
Yeah, I think it's going to be really interesting. I think, that this is why we're seeing some politicians talk about like student loan forgiveness, things like that, because I think, they're seeing the effect that this is having on kind of holding back some folks in the millennial generation. So it's things like that, perhaps thinking about solutions for this debt burden. It's also thinking about retirement and what's going on with Social Security. I mean, if you have fewer savings, when you get into retirement age, you're probably going to be more dependent on things like Social Security. So what is that going to look like when millennials start to retire?
Well, and Katerina, if we break it down even, go deeper into this in terms of racial variances, right? It gets even tougher if you're, a black millennial or a brown millennial.
Yeah, absolutely. And the millennial cohort is much more diverse than the ones that came before it, right? The country population growth is happening. There's more population growth among minority groups in this country. So every new generation is going to be more and more diverse. And we know that black and brown people, especially in the U.S., have much less wealth than their white counterparts. So, it really has implications for the U.S. economy and growth going forward.
Go ahead, Carol.
No, you know what I think was interesting, what you said about policy implications, because this is going to be a voting bloc, right?
Yeah.
A pretty big size voting bloc, and you do wonder what that might mean, what kind of policies that they would, Tim, ultimately vote in favor of.
Yeah, Katerina, I just want to end in our last minute by you talking about the wider economic consequences or implications of a generation like this not having the wealth that previous generations had. That has serious implications for growth.
Yeah, exactly. And we obviously, we want to grow the economy. So, and certainly to deal with our debt our national debt burden, which has, of course, only grown in the past year, we need that. We need an engine of growth. And if you have people with fewer means to spend and less ability to kind of to do things like that and buy homes, for example, it just really puts the economy in a more precarious state.
Yeah, that is really something important to think about, because you do think as people retire, maybe they don't spend as much, but a lot of them do have a fair amount of money to spend. But if this group does not, what does that mean in terms of economic growth?
Not good.
Well, listen, we talk about the aging of the economies, whether it's Japan, whether it's here, China's seeing it. They just boosted how many kids you can have in terms of a family. So people are looking at this seriously.
Yeah, they are. Katerina Saraiva, Federal Reserve and economics reporter at Bloomberg News. Thank you for joining us. In the meantime, let's get a quick check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. The world has reached an important milestone in the drive to inoculate against COVID-19. Bloomberg's Nathan Hager reports.
2 billion vaccine doses have been administered around the world, according to the Bloomberg Vaccine Tracker. It took just over 6 months to reach that milestone. At the current pace, it'll take another 9 to vaccinate 75% of the global population. That's the threshold that many public health experts say could provide so-called herd immunity. The U.S. and UK led the way with vaccinations early. China's given the most doses, and European Union members are catching up after a slow start. Right now, China makes up about 2/3 of the nearly 36 million shots given every day. In Washington, I'm Nathan Hager, Bloomberg Radio.
The White House will be boosting the global vaccination effort by sharing COVID-19 vaccines with the world. 75% of excess doses will go to the COVAX program. National Security Advisor Jake Sullivan says the global approach is needed to slow the spread of COVID-19.
We want to save lives and thwart variants that place all of us at risk. But perhaps most important, this is just the right thing to do.
Sullivan says the administration is giving priority to our neighbors. President Biden appears willing to back off on raising the top corporate tax rate following his meeting yesterday with Republican Senator Shelley Moore Capito, the lead negotiator for the GOP. Biden is outlining a plan for about $1 trillion in new spending financed through tax changes that would not raise the corporate tax rate, but would instead set a new minimum corporate rate of 15%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. This is Bloomberg Business Week. It is Thursday. Carol Massar and Tim Stanovic in our Interactive Broker studio. AMC, it was down big time, and then it rallied a little bit, and then where is it now?
It's now down 9.8%, trading at $56.37 right now.
Look up AMC, and you'll find out in the market dictionary what volatility means.
Oh, yeah. I mean, it was down almost 40% today, and it's risen by by close to 10%, all in one day. Carol, that gives it a
Can I just say,
cap.
still up more than 2,500% this year. Okay.
It's mind-boggling. It's unbelievable. It gives it a market cap of just close to $29 billion.
And that means it is roughly worth more than half the companies in the S&P 500. 50%, folks, of the companies in the S&P 500.
Okay, so just to give that a little more context, the market value as of yesterday's close, it's all over the place, Carol.
Correct.
I'll talk about yesterday's close. $31.3 billion. That's higher than Delta Airlines.
Right. Delta Airlines. Tyson Foods, is it still higher than Tyson Foods? Let's see if it moved around a little bit. Let me pull up Tyson.
Look, I think when we talked about this with Geeta Raghunathan earlier today, but the fact of the matter is if there was a story about the fundamental, if there was a fundamental story here, you'd see other companies like IMAX and Cinemark Holdings, for example, having similar stock reactions. But as Geeta told us, and as other analysts have said, what you're seeing with AMC is completely detached from the fundamentals of the company.
She said it should be about $7 a share based on the fundamentals of the company. It is trading way above that. And it is above, it looks like Tyson Foods as well. So
Rich Greenfield, an analyst at BTIG, has a 1 cent price target on the company's stock.
Yeah, time will tell, I guess, on this one. And they are able to pay down debt. They've been using the run-up in the price to issue shares, sell shares, and actually use it to cut back their debt, but we'll see.
By the way, I think I said Rich Greenfield at BTIG. He was at BTIG for years. Now he's at Lightshed Partners.
Oh, okay, good. Good for the clarification. Anyway, listen, we keep putting AMC in perspective just to remind you that there are fundamentals out there, and that kind of helps you when things get a little crazy. You can go back to that.
Down 8%. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Sessions, stocks lower across the board, big swings, especially for the Dow. Let's head right over to the first word breaking news desk. Lots going on with today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Like you said, stocks in a choppy session today. Dow's down 2 points, was down 266. S&P's dropped 14, and NASDAQ is still lower by 129. The U.S. 10-year yield at 1.62%. Gold is down 36. And transports dropped 56 points. Among the main 11 S&P sectors, utilities and energy led, consumer discretionary and tech pressure, and leaders to the upside in the Dow, Merck and Dow Inc., while Intel and Salesforce led to the downside. In other news, AMC in a wild ride today, gaining as much as 10% and falling as much as 40%. The information reported that Tesla's China orders were cut in half in May. And in U.S. politics, the Washington Post reported that Biden offered a new tax floor of 15% for businesses. Wrapping things up, Broadcom, CrowdStrike, and Lululemon. I'll report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. Right now, the Dow higher by 6 points, turning around, and to hear live breaking news over your Bloomberg. Type Squawk SQUAWK on your terminal. I'm Charlie Heller. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. I want to get right to it because Ross Gerber is with us because we love to talk Tesla with him. Keep in mind that after Tesla had an off-the-chart run in 2020, very different year this year. It's fallen more than 30% from its peak in late January. We recently had an analyst coming out saying Tesla's global EV market share is falling, and then there's Elon getting into restaurants. So Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management, is on the phone, back with us from Santa Monica, California. He is a fan of Tesla cars, owns cars and the company's stock. So good to have you here. How are you?
I'm good. How are you?
Doing well. Been looking forward to talking to you. 30% lower. What's going on? Are you running for the exits when it comes to Tesla?
No, definitely not. In fact, at these prices, I'm a buyer. Anytime the stock's below 600, I typically will add it to portfolios, especially ones that don't have much exposure to Tesla, like newer accounts. But I think, Tesla ran up, obviously, to a very, very high valuation. So part of this is just coming back to some reasonable valuation in here. So, by any means, Tesla should probably trade between 500 and 1,000 over the short term, period of time. So, I don't look at that as a concern to me because we really just follow what the company's doing and what the company's trying to execute. And if they achieve their goals, the stock will follow.
Well, but what about market share going down? I think it was Credit Suisse that has a report that says market share fell to 11% in April. We know China's been pushing back on them. Then you got, Elon saying restaurants. Come on, Ross.
Well,
when
your market share is 100%, you can only go down. So that's a little bit disingenuous, especially coming from Credit Suisse that can't even manage their book. But I think there's going to be other cars, and the EV business is going to expand exponentially as more and more people get into this business. So we expect our market share to go down, but the actual share of cars that are sold EVs to go up substantially from where they are today, which is just a few percent of all cars sold. So we really see for all EV makers, whether it be Ford or Tesla, a huge opportunity to go EV. And so we don't ascribe any value to that. Now, the restaurant thing, I think, has to do with the supercharger. So if you go to a Tesla supercharger, especially some of the new big ones, people hang out for 30 minutes, and what most of them, we go into the mall where it is and we get food. That's pretty much what you do. There's a Nike store and the one up in San Luis Obispo at Pismo.
Hey, that's my hometown, Ross.
Oh, it's a great supercharger. Great. Love Pismo, by the way. And I'm up there and I go shop at Nike. I get my kids' shoes and I come back and the car's charged. So putting restaurants in makes a lot of sense because then they can control the experience around the charger. And the Tesla community loves hanging out. So I see that as a net positive. He's not going to be a restaurateur, you know what I mean?
Right. Well, let's go from California to China and the opportunity in China, because The Information has a report out today, the tech news site, saying that there are concerns about the Chinese orders dropping by almost half in May. What do you make of that?
It's just not the information we have. Our information shows China's demand is off the charts for EVs and Tesla. The Chinese love Tesla. I can show you photos of like full Tesla stores, showrooms, So how Tesla delivers cars varies by quarter. And one of the issues that I think we need to get to the bottom with Tesla, which I think has less to do with demand, is how much are these part shortages affecting supply? Okay, because the Model S Plaid is still not out. Okay, it was supposed to be launched today. Actually, now it's postponed another week. I think it has to do with parts. We had this issue with, the seats, and the passenger seat, not having lumbar support button. These are parts issues, and all the car companies are struggling now, not only to meet demand, but to get all these parts. And we're seeing slowdowns in the factories in all the major car companies. So this is the part I'm trying to get to the bottom of, not really worried about demand at all, is are we having issues with supply?
Have you sold any shares in the current quarter?
I always buy and sell shares depending on the client. So, for example, yes, I've sold shares for clients who've been long-term investors who have huge overweight positions in, and then I've bought shares for clients that are new that don't have big positions in Tesla. So we try to manage to a portfolio allocation. Our allocation to Tesla has gone down over the last, I would say, 6 months, because it became extremely overvalued in our portfolios, and we manage risk and balance our risk rewards with our opportunities. So Tesla has been a wonderful reward for us, and we did take a considerable amount of profit with that. But it is still our largest stock position of individual stocks that we own, closely followed by MGM and Disney.
What's the typical concentration that you have in a portfolio that's been with you for a while?
For Tesla, right now, it's managed at around a 6% allocation.
So substantial, but not, everything.
No, listen, we manage money for lots of different people here, and we manage risk very, carefully. My philosophy of investing is trying not to lose people any money. Right. It's not maximum return. I've been doing this. This is actually my anniversary. It's my 28th year now coming in.
Congratulations.
And you don't make it through all these bear markets if all you're worried about is maximum return and I missed AMC or something. You know what I mean?
Yeah.
And so we manage risk very closely, and I consider 6% allocation pretty heavy.
Well, your clients are saying thank you, Ross, for trying to minimize any kind of losses. That's what we hope for. Hey, Ross, always good to check in with you. Ross Gerber, he is President and Chief Executive Officer at Gerber Kawasaki Wealth and Investment Management, on the phone from Santa Monica, owns Tesla's, owns the shares as well, as you just heard. Tesla's shares are down about $28 in today's trade. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everyone, you are listening to Bloomberg Business Week. We've just got about 29 minutes to go with today's trading session. Coming up, the chart of the day.
The chart of the day. The song of the day.
Baby shark, shark, shark,
no.
shark. Oh, my God. On YouTube, you should see the two of them.
Oh, yeah, we're just cringing. And, of course, the stock of the day as well. Dave Wilson, stocks editor, is going to be joining us in just a minute. In the meantime, let's get a check on the trading day with Charlie Pellet.
Charlie, baby shark, shark, shark.
No way. Here's what's going on. 28 minutes to go ahead of the close. Going to be very interesting to see where the Dow closes today. Right now, showing a gain of 5 points, up less than 0.1%. Choppy session today. Big move for the Dow. Have been down 265. Right now, higher by 4. But bottom line here, a little change, swinging between gains and losses. S&P on the minus side, down 12. Drop right now of about 0.3%. We've got NASDAQ down 124 points, down 0.9%. The NASDAQ 100 index down 0.9. Russell 2000 down 0.7. Dow Transports down now by 0.4%. Among some of the meme stocks, AMC, big swings there as well, down now by 9%. GameStop trading lower by 8%. Equities did pare back some losses after a report President Biden may be open to a lower corporate tax rate than 28%. 10-year yield 1.62%. We've got gold down 1.9%, 18.72 the ounce, and West Texas Intermediate crude lower, a little change, down 2 cents, 68.82 a barrel. In the United States, as more people get vaccinated, the challenge now reaching out to people who haven't gotten their shots for whatever reasons. Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health.
Of course, down the road, we very much worry about, as long as this virus continues to circulate at high levels, that there is the potential for mutations that could overcome vaccines. But so far, we haven't seen that. So right now, at least in the United States, that is less of my concern because our case numbers are falling. My main concern right now is making sure we protect people so that we don't see additional loss of life, so we don't see schools closed in places where some schools have been open. It's about getting back to normal. I'm not giving up on people. I still think we can reach them.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccination stocks that we track, Pfizer up 0.5%. German partner BioNTech, the ADR is down 1.6%. ADRs of AstraZeneca up 0.4. Moderna out of Cambridge up 2.5%. J&J Johnson & Johnson down 0.1%. In another Hong Kong push to improve the city's vaccination rate, Cathay Pacific Airways conducting a lottery in which the winner can host a private party on a flight around Hong Kong. I'm Charlie Pellet. That is a Bloomberg Business.
Oh, that sounds pretty cool. Thank you, Charlie Pellet. Yeah, that's all. That is Charlie Pellet written all over it.
What was it?
Well, thanks for listening, Carol. It is a flight. They're having a lottery in Hong Kong in which you can win a private party on an airplane flying around Hong Kong. So, that's 3 of us. And we'll
Carol wasn't listening, so it's just us.
No. We'll invite along a bunch of listeners and Dave Wilson, too, and throw in Tom Keene, John Farrell, Lisa Bromowitz. It's going to be a party.
That's going to be a party. I like it.
Party. Okay.
Thank you, Charlie
Now
Pellet.
listening.
This is Bloomberg.
Is this Shirley Bassey?
It is.
But Goldfinger.
And the band is Tim. Any thoughts?
No.
It's sort of a one-hit wonder. The Propeller Heads.
Oh.
That's a great name for a band.
Wait, how old is this song?
It's been around a while.
Okay. I thought the Propeller Heads were newer.
Well,
I
newer
thought
than
wrong.
what?
What do you know? I thought wrong about the song of the day.
Propeller is an Estonian punk band formed in 1978. Is that different?
That's different.
Okay.
Propeller Heads, one word.
Propeller Heads.
Yes. You work on that, Carol. I'll
am.
talk about the chart of the day.
Please do.
Yeah, history repeating. I mean, that's the question here. In the first 5 months of the year, the S&P 500 was up 12%. So what the folks at Nautilus Research did and what I reproduced in my chart, they looked at years in which the S&P 500 rose between 10% and 15% in the first 5 months of the year. Turns out there have been 10 of them going back to 1950. And then you look at the following 7 months of the year, and you find out the S&P 500 rose every time. Average gain, 11.5%. So, history is on the side of those who perhaps are looking for more gains in U.S. stocks. I mean, that's sort of the moral of the story here, you might say, that the index, if you just look at historical performance, now obviously there are a lot of other influences on markets, so, it's pretty focused as far as that goes. But you could say the S&P 500 is in a sweet spot about now.
But what about following years where there were double-digit increases in the S&P 500, following years of a bull market, following a year of a bull market?
Well, I'm telling you, this particular chart focuses on a range. So you're talking about performances comparable to what we saw this year.
Okay.
I mean, because, the concern is at this point, you've got inflation accelerating, interest rates may be going up. There are a lot of issues that investors have to face down the line. Oh, and history will also tell you that, the summer months here in the U.S., they don't tend to be that productive for stocks. That the gains, if you look at history, tend to be back-end loaded into the fourth quarter. So it's not like we'll necessarily get there right away if history bears out this year. But at the very least, you have a track record that bodes well for stocks in the final 7 months of 2021.
But it's a 10 to 15% range.
Exactly.
Okay.
Through May.
Through May.
So, you're talking about gains comparable to what we've seen this year. In any case, you want to see this chart, folks, send me an email. I will get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Propeller heads. This is the English electronic music duo formed in 1995?
It is.
Oh, see, that song sounded older than the 90s to me.
Wait, so how did...
You're confused too, Carol?
Was she alive?
Oh, yeah. They drafted her in as a guest vocalist on this song.
Kind of like Charlie
happens.
Pellet being pulled in, right?
Well, like Justified and Ancient with Tammy Wynette and the KLF.
That is like, okay, yeah.
Hey, Dave, before we go, stock of the day.
Cons, the ticker CONN. They sell electronics, appliances, furniture, whatever you need for the home. Shares reached a 2.5-year high today after the company came out with the fiscal first quarter results that beat estimates. So things are going well. Analysts like what they're seeing. And the ticker, by the way, no surprise, CONN.
Up 159% this year. This really plays to, I think, as people move around the country, right? Because if you're building up your home, you can tap into a company like this.
Well, just the simple idea that, people have been spending a lot of money on their houses in one form or another. This stock's up tenfold from its low in March of last year.
That's pretty impressive.
Yeah.
Good stuff. All right, check that out, as Tim mentioned, 4:15 p.m. Wall Street time, Facebook, LinkedIn, and on Twitter at The One Day. Propeller heads.
I didn't know it.
No, I didn't know it either.
But I knew it was
Shirley
90s.
Bassey, but I didn't know the rest of it. All right, good stuff. Dave, have a good night. Really appreciate it.
Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nancy.
Hey, Tim. The White House is ready to send 25 million COVID-19 vaccine doses to countries around the world that have requested them, some directly, others through the United Nations-sponsored COVAX plan. Bloomberg's Irv Chapman with the latest.
Shipments to Asia, Africa, and Latin America are about to begin with a plane load of Johnson & Johnson vaccine promised to South Korea, White House COVID-19 coordinator Jeff Zients said.
After making a 2,000-mile journey to California, these 1 million doses are being loaded into a plane that will take off for the Republic of Korea this evening, carrying hope and bringing life-saving protection to the 1 million South Koreans who have already signed up to get a shot. This is just the beginning.
Zients said the administration is working with vaccine manufacturers to ramp up production, with more doses going every month where they're needed most. In Washington, Irv Chapman, Bloomberg Radio.
The latest ransomware attack on meatpacking company JBS, right on the heels of the hack on the Colonial Pipeline, has officials rethinking their strategy for dealing with cyber intrusions. Former Defense Secretary and CIA Director Leon Panetta tells Bloomberg it's time for a unified approach.
What we don't have is a comprehensive cyber strategy for the country, in which the country, working with local government, working with private business, working with state governments as well, is developing some kind of comprehensive approach to providing the defenses we need in order to deal with these attacks.
Panetta says the attacks are not just an economic matter, but also a national security concern. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Folks, Tim and I have got a couple of housing stories we want to bring to your attention. One is by our team of Marcy Nicholson, Dave Merrill, and Cedric Sam, saying that building a home in the United States has never been more expensive.
Yeah, from lumber to paint to concrete, the cost of almost every single item that goes into building a house in the U.S. is soaring. In some cases, the price increases have topped 100%, Carol, since the pandemic began.
Yeah, there are a number of factors at play. We're talking about rock bottom mortgage rates, to city dwellers rush to the suburbs, to shortage of materials. The simplest explanation, though, is that there's just too much demand for builders and their suppliers to handle. I was talking to someone who does over kitchens, and he's like, you don't want to do it right now because you will pay easily a premium on top of what it would normally cost, just because people can't get the goods that they need to do it.
I actually spoke to a contractor yesterday, and he told me he's never been busier right now. And he said, I don't know where everybody's getting all this money.
Well, home values have gone up.
They have.
People who often own homes are also often have investments or in the market, and they probably feel wealthier after the past year. We know that's going on. Yeah, you do wonder if it ultimately, and rates are low, so you can either cash out some of your home or borrow money to do it, home equity.
There's another story that we want to get to, Carol, about home listings in the NYC suburbs. They're up, listings are up, and there's actually not as much demand right now. So we could start to be seeing some sort of lull. Home listings are increasing in some New York City suburbs, but not enough to satisfy that insatiable buyer demand. Inventory on Long Island, including the Hamptons and the North Fork, has been climbing for the past 3 months as sellers see opportunity to cash in on their long-held properties. That's according to a report by the appraiser Miller Samuel Inc. and brokerage Douglas Elliman Real Estate.
Yeah, exactly. And the portion of Long Island's closest to the city's single-family home listings jumped 69% in May. That's listings from a year earlier. At the same time, purchase contracts soared 162%. For condos, listings in the area were up 64%, while deals nearly quadrupled.
And
so there's still demand is
But those people who
outstripping.
sell, in some cases, have to move somewhere else.
Yeah, right. That's how it works, right?
Yeah.
You go somewhere. All right, it's amazing housing.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. New York Fed President John Williams says now is not the time for the Federal Reserve to adjust its bond buying program, though it makes sense for central bankers to be talking through options for the future. Williams made the comment during an interview with Yahoo Finance. It is a down day right now for the Dow, the S&P, NASDAQ 100 index, and the Russell 2000. We've got 13 minutes to go ahead of the closing bell. Stocks have paired losses. After a report, President Biden may be open to a lower corporate tax rate than 28%. S&P now down by 14, a drop there of 0.4%. Dow Industrials, which have been down as many as 265 points, down now by 9, a drop of less than 0.1%. NASDAQ is down 143, a drop of 1%. 10-year yield 1.62%. Gold down 2%, 1871 the ounce. West Texas Intermediate crude, little change, up 3 cents, 68.86 a barrel. Among some of the names scheduled to report after the closing bell today, we will be hearing from CrowdStrike and also Broadcom. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 and a half minutes left in today's trading session, and we've been bouncing around, but we're definitely off our lows of the session, but also off our best levels, still down about 1% on the NASDAQ, as you just heard Charlie recapping the numbers. Let's get to it with Brian Jacobson. He's multi-asset strategist at Wells Fargo Asset Management, joining us on the drive to the close on this Thursday. $506 billion in assets under management on the phone from Milwaukee, Wisconsin. Brian, it is an interesting day to say the least. We focus on the meme stocks. We've got economic news. We're getting ready for the monthly jobs report. What is it that you and your team focusing on right now when it comes to market fundamentals?
Hey, yeah, it seems like you've got to focus on a number of things all at once. Last night when I checked Bloomberg, it looked like the S&P 500 futures were in the green. They were positive, and then it seemed like after it was announced that the central bank in Russia was going to get out of U.S. dollar-denominated assets, things went south from there. I think that maybe the market is beginning to get a little worried about some of those geopolitical issues, whether it's human rights issues with China, what that's going to do with the United States relationships, or cyber attacks allegedly coming from Russia. And then also you've got the Fed, perhaps talking about tapering. Plenty of things to be worrying about, but we're actually still optimistic. We're still maintaining our pro-cyclical stance with our portfolios, watching the data very closely. I mean, we do think that this growth and inflation dynamic will resolve itself to be where it is transitory inflation, and that we could still see not just decent growth this year, but actually a slightly higher trend rate of growth coming out of the COVID crisis.
Wow. So you do agree with the Federal Reserve officials who continue to reiterate that they believe this inflation that we're seeing now is transitory?
We do. And, the reason for that is that when we look at a variety of different, what we consider to be leading indicators of inflation, a lot of it, to be perfectly honest, I think hinges on two things. One is bank lending coming out of the COVID crisis. How quickly will that accelerate? Because inflation, people think that it's always and everywhere a monetary phenomenon. That was the famous quote from Milton Friedman. But it's more about credit availability and lending. And so far, banks haven't really held a lot of additional assets on their balance sheets unless they're treasuries. And so we have to see what happens with bank credit coming out of the COVID crisis. And then productivity growth. If you actually have strong productivity growth, you can support faster wage growth and yet have declining prices. And so we think that a lot of the impulse to the inflation numbers is fleeting ultimately.
So you said that you think the growth and inflation dynamic will eventually resolve itself to where you said that it is transitory and settle with a higher trend growth rate. What kind of growth rate?
Yeah, coming into the COVID crisis, seems like people were just content with, chugging along at 2.5%. But if you actually get that faster productivity growth, that could support something closer to 3%. Now, that might not sound like a lot if you go from 2.5% to 3%, but, multi-trillion-dollar economy, that does add up. And so we think that that's really the thing that we have to see more evidence of, but it seems like we have early signs that businesses are making the investment in capital expenditures, so property, plant, and equipment. Right? COVID forced a lot of technology adoption on individuals and businesses that they otherwise wouldn't have done, or maybe would have done, but over a longer time frame. And that could then actually result in that faster productivity growth.
How much of the productivity growth or economic growth that you see happening this year and even next year, as you mentioned, is priced into markets right now? And what opportunity is there for more gains in the markets? Because the market's forward-looking. So I do, and I ask this question all the time, what is priced in and what isn't?
Yeah, that's the tricky thing. Going into this year, we thought that we'd probably get around 4,200 on the S&P 500 and then encounter some turbulence.
And that's pretty much where we are.
That's pretty much where we are. Yeah, exactly. And so and we've experienced a little bit of turbulence. I don't think anything to really write home about. But summer isn't even here yet, so let's see what happens. And then making a move higher more in 2022 towards around 4,400 on the S&P 500. So maybe the market did get this priced in properly as far as the growth outlook, but where we think that there could be more of a disconnect is in terms of how much better longer term growth could be going forward, and then also the value growth rotation, how long that could last. We think that maybe a lot of the large versus small, so the rotation back into small, maybe that has kind of played itself out. But we think that given the cyclical exposure within the value side of the spectrum, that's where we think that could actually have some legs.
Corporate taxes. We did see markets seem to get a little bit of a leg up, or at least bounce off their lows when the Washington Post initially, and Bloomberg matching this story as well, the president seems to be offering a major change to tax proposal and offer to get his infrastructure deal through with Republicans. So now we're talking about a corporate tax rate maybe starting with a floor of about 15%. That's very different from what he talked about earlier. How big of a deal could that be potentially to companies' corporate profits that ultimately play out in the equity markets?
Yeah, we actually think that could be a very big deal. And to be honest, though, we thought that his original proposal about bumping up the corporate tax rate was almost just a starting point for negotiations. Kind of saying what are the contours around where he wants to go. And then I think it's a testimony to how he wants to get a deal done. And he's not going to be very doctrinaire about what that rate needs to be. Maybe it's going to actually be a variety of taxes on high net worth individuals and on corporations.
But does it really matter to corporations? Does it really, how much does, it matters, but we also know the effective or the real tax rate that they ultimately pay is often a lot less than what the mandated rate is.
It is, exactly. Yeah, that's why they have tax attorneys, right? There's all sorts of different ways. And it's also one of the reasons why it tends to hit smaller cap more than large cap, just because of, if you think about, number one, the domestic orientation is small caps relative to large caps, but then also the resources that they have as far as doing, transfer pricing arrangements and setting up, different vehicles in order to engage in legal, tax avoidance. It might not matter quite as much. And one of the things that could happen if you increase the corporate tax rate is that it could actually encourage businesses to take on more leverage. And I think that a lot of people are already worried about how much leverage businesses have taken on with low interest rates. And if you bump up the corporate tax rate, well, one way that you can try to shield that is through the interest tax shield on debt. And so does that then just create some future vulnerability as far as, increased financial leverage? So,
Brian, just we only have 15 seconds.
As a free lunch.
We only have 15 seconds left. I want to know if any of the volatility that we're seeing in the meme stocks, AMC down 17%, Express down 20%, Bed Bath & Beyond down 28%. Does that have any risk of going further into markets?
Just about 20 seconds here.
Yeah, we don't think so. We don't think that it represents any sort of systemic risk. I mean, it's a story that's been around for a while, and it's very interesting. But to us, it doesn't seem like it's spilling over into other parts of the market. It seems like it is concentrated within those stocks that are mentioned heavily in, the Reddit boards and things like that. So we don't think it represents any sort of financial risk.
Got to run. Brian, thank you so much. Brian Jacobson over at Wells Fargo Asset Management. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell on Bloomberg Radio, Bloomberg TV, and YouTube, counting you down to the close on this Thursday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostick alongside Taylor Riggs and Gina Martin-Adams here to count you down to that closing bell and here to help take us beyond the bell. Carol Massler and Tim Stenovic bringing together our Bloomberg television, radio, and YouTube audiences. It's a global simulcast. Carol, what are you watching?
Well, I'm trying to keep my eyes off of AMC because it's been all over the place today, but I'm trying to focus on some of the fundamentals. We got the weekly jobless claims numbers. We got the ADP numbers. We got ISM, a lot of positive economic numbers ahead of the monthly jobs report. So I'm trying to think about the fundamentals. What is the fundamental backdrop for a lot of corporations and what that means ultimately for stocks, Tim?
Yeah, not just economic fundamentals, though, moving the markets today. It has to do with reports of tax policy changes as well, because we did see the S&P 500 down by close to a full percentage point earlier in the day, more than 40 points. And then the Washington Post reported that the president had pitched a 15% minimum tax on U.S. corporations to Republicans. This is a way to fund a bipartisan infrastructure package. We saw stocks take a turn higher because, hey, lower taxes means more profit, Gina.
Yeah, I think it's a great point. And frankly, we're seeing absolutely surging profitability for most S&P 500 companies. But we are starting to see a little bit taken out of expectations going forward as we contend with inflation. Tomorrow's most important data point, in my opinion, is that average hourly earnings number. If we start to see earnings accelerate, if we start to see wage pressures come in, those pressures on stocks are only going to get greater, and this consolidation could turn into a bit of a correction.
And you start to see some of the numbers that we got this morning remain. ADP and some of those jobless claims. We're getting a sub 400,000 for the first time. ADP looking at 978,000. Though Mike McKee nailed it when he said there is no correlation between that and the big data point tomorrow.
All right, we'll get into closing bells here. Your meme stock's taking it in the gut right now. And here's your S&P 500 taking it in stride. Down about 3 to 0.4% here ahead of that big jobs report tomorrow. 4193 on the board as we wait for these numbers to settle. NASDAQ Composite 13,614. That's down 1%. The Dow Jones Industrial Average down less than 0.1%. And the Russell 2000 having another down day here, down about 0.8%, Carol.
Yeah, listen, we keep going back to the monthly jobs report. Gina highlighting, the stats that she's going to be focusing on, but it really does. We'll see whether or not the economists really miss it in a big way and what kind of tone it ultimately sets for the market trade tomorrow. Really, all eyes on that 8:30 report tomorrow, Taylor.
And, Romaine makes fun of me. He thinks I'm taking a grocery list. What he doesn't know is we're desperately taking notes on some of the sector level movers that we're watching at this closing bell, because there is a hint of defensiveness underneath the markets today. Household products was the best performer for our radio audience. You're looking at a gain of 1%. It's Procter & Gamble, it's Clorox, it's Colgate, right? Even though staples on an inflationary basis underperformed the S&P 500. So this was an interesting mover for me today. Finally, we'll go down to some of the losers. 2.5% loss, Carol, for some of the automakers.
Yeah.
Tesla, there was that report that their China EV sales halved in May. So despite some of the positive commentary that we got out of GM and Ford, Tesla telling us a different story.
We just talked with Ross Gerber of Gerber Kawasaki. He loves Tesla, owns Teslas. He's been buying on some of these dips, so he's certainly still kind of all in. Let's talk about some of the automakers, because as you mentioned, Taylor, some of the traditional automakers, they were definitely the gainers in today's session. Ford among them up 7%. 7.3%. 52-week high it hit. EV sales surging at the company, up 184% in the month of May. Then you had General Motors up the most in 4 months, a 6.4% gain on that one. Company, I know you guys were talking about it earlier on TV with our own David Welch, saying plans to boost output at 2 truck plants will let the company beat its first half forecast and hit the high end of its full year target. So you're kind of saying, what chip problem when it comes to the auto industry? Borg Warner also plays into the auto industry. They're going to work on their first electrification project with Hyundai. This stock has been on a tear, and we also saw it move up about 1.7% in today's session. And then I'm going to end on a little bit of love for everybody.
Great furniture.
What is this? I see it's red on the screen.
I'm not pouring
It's red on the
popcorn.
screen. What happened?
Well, it was
Peter,
higher.
not allowed.
It was up 11% in today's session. I mean, it's up more than 100% this year. This is the kind of market we're in. I mean, AMC, I thought it would be a gainer, then it was a decliner, then it was a gainer.
That was the story of my life today. What
do you got, Tim?
That was the story of my life with following AMC today. I mean, talk about volatility. At some points, it was actually in the green. It was down as much as 40% at one point, and it ended up finishing the day down nearly 18%.
Perspective, everyone.
Yeah, that's a good point. This really traded all over the place following the news that the company was doing another stock offering. The company did end up
volatility
selling,
in AMC?
Yeah, volatility. Meme stocks. That's the theme of my decliners today. Selling about $587 million in new equity capital, finishing the day down nearly 18%. Express, sell-off in the meme stocks today, down more than 19.5%. Bed Bath & Beyond, down just about 28%. Carol, you mentioned Tesla, finishing the day down by more than 5%. Concerns about growth in China after the information reported that the company had struggled in a recent period of time to actually sell vehicles there, Taylor.
And I will give you right on the screen, it is priced lower, yields higher, all across the curve, ranging anywhere from 2, 3, 4, 5 basis points, really in part, Gina, on some of these inflationary trends that we continue to see, the better than expected jobs numbers that we got this morning, what that means for tomorrow, some of that higher growth, that reflationary trend, certainly showing up in the bond markets today. And I think you have a look as well at factors. What did we see today with factors?
Yeah, really playing on the inflationary theme is value stocks continuing to absolutely pummel the rest. This chart shows Bloomberg Intelligence factor families, the blue line up top there, the runaway leader really since December of last year has been value stocks. When we look at the highest value versus the lowest value stocks, 1,800 percentage point gain. Really strong performance for value, really continued on through today. Value factor leading all factors by more than 100 basis points once again today. I think the market is trading on inflation, and inflation is the biggest risk to really reversing some of these trends that have been in place for months now.
And it's interesting that volatility is one of the losers, you guys, because as you were talking about the meme stocks and some of the volatility that we've continued to see, Carol, certainly sort of that rotation of value, but volatility not in vogue.
Yeah, well, what's interesting is volatility when it comes to the monthly jobs report, right? Economists missed it by a mile last time around, and I think everybody's bracing for another surprise. Mike McKee, as you mentioned, Taylor, saying a lot of these reports that we got, the weekly jobless, they're not going to give us clues about what happens in terms of the monthly jobs report tomorrow. And you have to keep in mind that there's no real models for figuring out the numbers tomorrow. Yeah. And you still have so many jobs lost, right, Romain? So that it's really kind of hard to get your hand around it.
Yeah, I mean, well, great point. I mean, it's always a reminder about the number of jobs that have been lost and still have not been recouped, and we always have to keep that in perspective. I will say, as a glass half full kind of person, I'm not that kind of person, but Taylor is. But we have seen the trend line, Carol, sort of become a little bit more positive. We saw that reflected in the jobless claims data. That, again, is improving. And we've seen some improvement in other areas as well. And I guess at some point, that eventually will add up maybe to 8 million jobs or so that we're still in the hole.
If the trend line continues. And that's what Mike McKee will point out, that, all of these reports give us an idea on magnitude and direction. And so that's things that we want to check into. Should we get to some earnings, everybody? Because we've got Slack out. Slack Technologies, first quarter adjusted EPS, 8 cents versus an estimate that was for a 1.2 cent loss. So that looks like it's coming in with a big beat. Also, first quarter revenue, $273.4 million versus an estimate of $265 million. So let's take a look at the stock in the after hours. Just down a little bit. Here, just down about 0.5%.
We're going to take you on over to a stock that I see some improvement on, Lululemon, where you get first quarter net revenue that looks much better than expected. 1.2 billion, estimates were 1.1 billion. You migrate down to the bottom line, also a big improvement. 116 adjusted EPS versus estimates of 91 cents. You really push it forward. Analysts really wanted to see better forward guidance given what other retailer commentary has been. And you're seeing second quarter net revenue come in at about 1.3 to 1.33. The estimates were 1.2 billion. There was some disappointment in the previous guidance, Tim, and so this is certainly one that analysts might be happy about.
Yeah, you're keeping an eye on Lululemon. I got my eye on CrowdStrike, the company's first quarter adjusted earnings per share, 10 cents, beating estimates of 5 cents. First quarter revenue estimates were $291.4 million. The company reported revenue above that, $302.8 million. We're also keeping an eye on first quarter fiscal 22 financial results. I mentioned $302.8 million, beating estimates there. Taking a look at the chart in after hours trading, shares right now are higher by just about 1.3%, Romaine.
Hey, Tim, so there's a great story on the Bloomberg terminal today that kind of looks at some of the generational divide, I guess, in wealth creation, home buying, and I guess the general status of millennials versus those baby boomers that we all like to deride. I'm not a baby boomer, by the way. Thank you to our producers who keep calling me one.
I'm a geriatric millennial, by the way, which means I'm on the older side of millennials. But look, it's a serious issue, and there are a host of factors that are related to this. But millennials could be among the first generations to actually not do as well as their parents in previous generations. It has real economic consequences. It has real consequences for economic growth. It has to do with the higher cost of college, the higher cost of education. It has to do with wages not keeping up at the same rate that they were. And of course, the increase the cost of buying a home and living in this country.
It's particularly striking as well because the millennials really stand out while the rest of homeowners, while the rest of the U.S. has generally seen a reduction in their debt relative to income. Millennials have not. This generational struggle is very unique in the grand scheme of things, where the consumer is generally in much better shape than they were even 10 years ago. The millennial generation has really struggled to see that performance improvement.
And you do wonder if they don't have as much money to spend kind of in their retirement, ultimately what that means for overall economic growth. All right, that's going to do it for our cross-platform coverage on this Thursday on Bloomberg Radio, on Bloomberg TV, and on YouTube. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so we had a batch of earnings. We're going to be
Keep thinking
watching
it's the end of earnings season, right? It's not.
Well, there's always a little that come out, right, that are kind of off the regular schedule.
I like 3 a day, 5 a day. That's cool.
It's much more manageable. Yeah. You're off tomorrow.
I'm off.
Can we be following the jobs report from
I will. I have FOMO about it.
I know you said that earlier. Like you're kind of bummed.
Yeah, I'm bummed.
Especially if it'll be a big surprise like it was the month before.
Oh, I will be watching.
Okay. Well, you have a good time.
Thank you.
Enjoy the long weekend.
I'll see you on Tuesday.
That's right, because I'll be off on Monday. All right, take care. Tim Stenovic there. Let's get to world and national news. Over to Nancy Lyons. She's in D.C. Hey, Nance.
Hey, Carol. President Biden will sit down with West Virginia Republican Senator Shelley Moore Capito again tomorrow to discuss the proposals that both sides have made on infrastructure and how to pay for it. The president's latest proposal calls for replacing a corporate tax rate hike with a minimum 15% corporate tax rate. The White House says companies that paid nothing in taxes would then end up paying their fair share. White House Press Secretary Jen Psaki says raising taxes on those making less than $400,000 a year is off the table.
If the Republicans want to go back to raising the corporate rate as a part of this specific negotiation, we are absolutely for that, and we think that these corporations could pay more. If there are other options, great. We're not going to go down the road of user fees or other areas that would raise taxes on the American people.
Psaki says the administration is also open to reallocating funds left over from coronavirus relief bills. Well, the White House is outlining plans for sharing vaccines to countries all around the world. National Security Advisor Jake Sullivan says 25 million doses will be going to foreign countries across Asia, Africa, and Latin America.
Our goal in sharing our vaccines is in service of ending the pandemic globally. Our overarching aim is to get as many safe and effective vaccines to as many people as fast as possible. It's as simple as that.
Sullivan reiterated the administration will not use vaccines to secure favors from countries. He says 75% of the supply will be going to COVAX, which provides equitable access to countries all around the globe. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. I'm Carol Masser, and joining me right now is Charlie Pellet of Bloomberg News. Charlie, this story caught our attention by our Megan Tribe of Bloomberg News. It was supposed to just be an appreciation bonus, but not start a wage war. But apparently something else is going on. In September of 2020, Cooley LLP, it's a Palo Alto-based law firm, announced it was handing out $2,500 to $7,500 in one-time payments to associates. The bonus is coming as the firm, along with many others in the legal industry, realized it was both flushed with cash and facing worker burnout during the pandemic.
Indeed. Boy, I tell you, you talk about wage inflation here. Unbelievable. But what happened, this story gets even better. Yes, Cooley was offering these bonuses, and then other law firms around the country, Davis Polk, for example, Wilkie Farr, they started matching and even upping those bonuses. Bottom line, we'll cut right to the chase. Bonuses soared to as much as $140,000 for a senior associate, and they've kept coming in 2021 with a potential windfall of $164,000. And just so that you don't drive off the road, that is on top of a regular lawyer's salary.
Bonus.
Yeah.
Icing on the cake.
Exactly.
Well, alongside the added cash, firms promise more time off and extended work from home arrangements, all part of an effort to retain and attract talent for what are often grueling 100-hour work week. Listen, there's been, as they say, a feverish rush of corporate work to hit in the latter half of 2020, most notably a rush of restructuring filings as well as new efforts to raise capital in the blank check merger frenzy. We've talked about this. We know lawyers, we know M&A bankers, they have been busy because of SPACs and because of deals.
Indeed, and our story quotes Big Law Investor, which tracks compensation. First-year associates, by the way, joining a major firm this year, they'll be making about $190,000 in salary. That number hasn't changed since 2018. An associate entering her 8th year with a major firm should expect to be paid $340,000. Make that your number of the day.
If you're an equity partner, you're talking about making more than a couple $1 million. So they are seeing some pretty decent paychecks. All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters, I'm Charlie Pellet. We begin with a number of after-hours earnings reports. Lululemon forecasting net revenue for the second quarter, and that guidance beat the average analyst estimate. Shares of Lululemon up right now by just about 1%. It sees second quarter net revenue in the range of 1.3 to 1.33 billion. Estimates 1.20 billion. CrowdStrike boosting its adjusted earnings per share forecast for the full year. That guidance beating the average analyst estimate. Shares up by 1.4%. And the buyout firm Apollo Global Management has agreed to acquire Employ Bridge. That is an industrial staffing company that's based in Atlanta. It was a down day on Wall Street today ahead of the jobs report tomorrow morning. S&P down 15, drop of 0.4%, ending the session at 4192. The Dow down 23, down 0.1%, have been down as many as 265 points. Nasdaq down 141, a drop of 1%. 10-year yield 1.62%, gold down 2%, 1871 the ounce. West Texas Intermediate crude 68.86 a barrel. Equities fell as investors digested a raft of economic data, and there was a report from the Washington Post that President Biden may be open to a lower corporate tax rate of 28%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. So I want to get right to it. Charlie, of course, breaking down the earnings. Broadcom among them after the close. Second quarter adjusted EPS, $6.62. That's a beat. The estimate was for $6.44 a share. Second quarter adjusted net revenue, $6.61 billion. The estimate was for $6.51 billion. Also talking about the third quarter revenue, looking for $6.75 billion. That's above the estimate of $6.59 billion. So let's get to it. What you need to know about the quarter and what's going on in the semi group is Dan Morgan back with us, VP, Senior Portfolio Manager at Synovus Trust Company, roughly $23.5 billion in assets under management. Back with us on the phone from Atlanta. I know they just crossed the Bloomberg, and you're just going through the numbers. Initially, though, Dan, what do you make of what we got from Broadcom? Because I'm just taking a quick check on the stock here in the after hours. It's just up a hair, but it looked like it did spike initially.
Yeah, Carol, I mean, you read those top and bottom line, estimates and actual numbers. Those were above, so that was strong. If we kind of break it down, the Semiconductor Solutions Group, they came in at $4.82 billion in total revenues. The estimate was at $4.68. They were a little bit shy on their infrastructure software group, which you'll remember these names, Computer Associates and Semantics. Those are the two companies that they bought. They came in about $179 billion. The estimate was $1.8 billion. But I think you're still seeing some positive momentum, Carol, in their Semiconductor Solutions Group. We've talked about this stock before. They generate about 25% of their revenues from Apple. We know Apple had a huge jump in iPhone revenues in their last quarter, up 65% year over year. And also, I think we're starting to see some positive traction in regards to their data center area. That's about 50% of their total revenues are in telecommunication equipment and cloud and data center. And we know that Intel on the last quarter thought that that was kind of a low point in terms of demand for their chips that go into the servers, that go into the data centers. And that's another area that is very promising for Broadcom. So I think overall, Carol, what we could take away from their report, obviously good beat on the top and the bottom line. The third quarter above estimates, right, in terms of what we're looking for. And then they beat on the Semiconductor Solutions segment, but we're a little bit shy on the infrastructure software revenue group.
So when I look at the Philly Semiconductor Index, the SOX, it's up about 12% this year. When I look at a name like Broadcom, they're up about 6%. How do I kind of position Broadcom within the broader semi sector?
Well, you're right, Carol. If you look at the performance versus the SOX and also the S&P 500 Information Technology Index, they've kind of underperformed, right? They haven't done as well as like NVIDIA or some other names in that space. And, I think, a couple things. Number one is they're very diverse, right? They're not like NVIDIA where it's just cloud and data center chips, or Intel is PC chips and data center chips, or AMD and so forth. They have kind of a broad base in terms of a lot of things that they're involved with. So I think they've been trending a little bit below the benchmarks. They haven't been performing as well. I'm hoping they'll get a little bit more of a catalyst going forward. We've talked before. I know you talked about with Yahweh about the projections about what's expected with this new infrastructure plan that's going on in Washington and offering broadband to everyone in the country, and all the money they want to spend to do that. And this company, Broadcom, is very well positioned to take advantage of that. They're like number one player in set-top boxes and in broadband. So that could be an area that could be a catalyst going forward for them, even though they haven't performed as well in the past.
Hock Tan, the president and CEO of Broadcom, saying our third quarter outlook projects this year-over-year growth to sustain as we continue to see strong demand from service providers and hypercloud. Consolidated revenue growing 15% year-over-year, and operating profit increased 25%. That from the CFO of Broadcom, generating $3.4 billion in free cash flow, or 52% of revenue in the quarter, and are expecting free cash flow to remain strong in the third quarter. How do they need to be spending that cash, in your view, Dan?
Well, I would just say continue to focus on these growth areas that we talked about, right? And we talked about the build out, maybe 65 to 100 billion in spending for infrastructure. That would be a good area. Continuing to increase their market share in regards to their exposure to Apple, which is doing very well, and also in data center. And then avoiding the things we always talk about, Carol, which is this huge supply-demand conundrum that we're in right now with these shortages. Obviously, that's impacting a lot of companies in terms of their ability to deliver.
Hey, listen, Morgan Stanley coming out today. Chip makers are facing asymmetric risk, saying that that's because of high valuations. How do you see it?
Well, I don't know, Carol. You know, you're always talking to the wrong guy when you throw those kind of questions at me. You know, I'm going to refute that and just say, look, the semiconductor area, compared to our previous conversations we have, is executing on all cylinders right now. It could not be a better scenario. It's like we have more demand than supply. We cannot produce them quick enough. We have all these things that we've talked about, data center, artificial intelligence, 5G rollout, that are in the mix. And yeah, I mean, valuations may be high in terms of the multiples, but it's like, well, the growth is high, right? So
But is that all reflected, Dan? I mean, Morgan's point is that it's kind of already reflected in a lot of the share prices.
Yeah.
Just got about 25 seconds left. Do you agree or not necessarily?
Well, I guess I would disagree, just because I think there's some broad-based secular themes that are still going to be playing out that, you know, we've spent so much time going through in the past that I still think are still in the mix. And just because the valuations are high, I still think we still have a ways to go.
Doesn't mean they couldn't go higher. Doesn't mean there couldn't be more demand. I get it. I totally get it. Dan Morgan, thank you so much. Appreciate it. Just breaking it in real time as those Broadcom earnings were crossing. Dan is VP and Senior Portfolio Manager over at Synovus Trust Company, $23.5 billion in assets under management. Dan joining us once again on the phone in Atlanta. Shares at Broadcom down 2.7% in the after hours. You're listening to Bloomberg Radio. Join Brian Curtis.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. This is Bloomberg Business Week. And coming up, we're going to get a check on the beer industry, which employs millions of Americans. It also brings together really massive industry, some $328 billion worth. So we're going to get into it with the President and Chief Executive Officer of the Beer Institute. We're talking about Jim McGreevy, so he'll join us in just a moment. In the meantime, back to some of the news after the close and back to Charlie Pellet.
Means earnings. Carol Master, let's begin with Broadcom. It forecasts revenue for the third quarter. That guidance beat the average analyst estimate. Second quarter Semiconductor Solutions revenue at Broadcom, $4.82 billion. Estimates there, 4.68. Shares right now trading little changed. Dan Morgan is with Synovus Trust. He was interviewed moments ago right here on Bloomberg Business Week.
They generate about 25% of their revenues from Apple. We know Apple had a huge jump in iPhone revenues in their last quarter of 65% year over year.
Also out with earnings after the bell, Lululemon. It forecasts net revenue for the second quarter. That guidance beat the average analyst estimate. Shares of Lululemon up now by just about 1%. Turned out to be a down day on Wall Street. Stocks fell as investors digested a raft of economic data and a report President Biden may be open to a lower corporate tax rate than 28%. As for the inflation outlook, Brian Jacobson is multi-asset strategist at Wells Fargo Asset Management. He was interviewed right here on Bloomberg Business Week.
We do think that this growth and inflation dynamic will resolve itself to be where it is transitory inflation, and that we could still see not just decent growth this year, but actually a slightly higher trend rate of growth coming out of the COVID crisis.
The S&P 500 index today down 15 points, drop there of 0.4%. The Dow down 24, down 0.1. NASDAQ down 141, down 1%. All of this ahead of tomorrow morning's jobs report. Complete coverage as you have come to expect throughout the history of Bloomberg Radio and Television, 8:30 a.m. Wall Street time. And, of course, complete analysis and lots of interviews throughout the day. 10-year yield right now, 1.62%. We've got gold down 2%, 1871 the ounce. West Texas Intermediate crude up 1%, 68.89 a barrel. I'm Charlie Pellet. This is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, we're going to wrap up this last half hour with an update on the beer industry with a 25-year veteran of policy and political work. He now heads the Beer Institute, the national trade association that represents America's brewers, also importers of beer, supply chain partners. According to their website, adds up to a $328 billion industry supporting more than 2.1 million American jobs. For more on the pandemic and post-pandemic worlds of the beer industry, let's bring in Jim McGreevy, President and Chief Executive Officer of the Beer Institute. He's with us on the phone in New Jersey. Jim, nice to have you here today. How are you? And talk to me a little bit about kind of where you guys were and your industry members 1 year ago at the start of the pandemic.
Oh, boy, Carol. Well, first of all, thanks for having me. I really appreciate it. Where we were a year ago is probably where so many other Americans were a year ago personally and in their jobs, really trying to figure out as of March 13th and around there where our industry would be going. Thankfully, the federal government made the production and distribution of beer essential as part of the grocery system. So we were able to keep our breweries and many of our folks employed in the making and distribution of beer. Obviously, with the bars and restaurants closed for months on end, particularly at the beginning of the pandemic, we saw so many of those jobs lost, nearly 570,000, as a matter of fact, throughout the U.S., jobs supported by the beer industry. But the Beer Serves America report really it tells the story of a very resilient industry and one that's coming back, we hope, as America comes back. So we're very pleased with some of this data from our
Right.
biennial report.
Well, it's interesting, local beverage center where we pick up like our cases of water and, whatever else, juices and stuff. But I said to them how, I hadn't seen them in about a year. And I said, how are you guys? And they said it was really hard because like 80-90% of their business was supplying all of the local restaurants in the community. And that was just shut down. Tell us about your members, because we think about, those of us who go to the supermarket, right? Or, to pick up something. But it's the restaurants and the hospitality industry that your members play such a big role on. How hard hit were they?
Oh, they were very hard hit, not just from the hundreds of thousands of employees that either lost their jobs on a permanent or temporary basis, but we saw nearly $20 billion in decline in retail beer sales. You think back to that mid-March period of 2020, the March Madness was just getting rolling with the conference tournaments leading to the NCAA tournament. St. Patrick's Day, we loaded in a lot of beer in the bars and restaurants throughout the country for St. Patrick's Day. So many of these holidays, then moving into the summer with Memorial Day, 4th of July. The bars and restaurants in this country were just so hard hit. You had I think you did an interview with John Taffer from Bar Rescue last month. And he said that he's starting to see them coming back, though. And that's what the data shows that we're seeing. We're getting near the end of this COVID period, thankfully. And I think we're starting to see these bars and restaurants crowded. I can tell you down here at the Jersey Shore, we saw lines out the door and down the block to get into some of the bars and restaurants at the Jersey Shore just this past weekend when it was torrential rain outside with folks standing outside it with garbage bags and umbrellas just trying to get in and gather together. And a lot of that gathering is done around a beer. So we're very hopeful for the recovery of the bars and restaurants. It's so important to our country, so important to beer. During the COVID period, we saw significant spoilage of food and beverage, and beer is perishable.
Right.
Nearly $900 million dollars worth of beer that was just perishable, and that just really hurts the industry and hurts the bars and restaurants.
That's amazing. That's a big number. Hey, in terms of demand, ultimately, though, did it pick up substantially over the past year? Just got about 30 seconds. We'll do some news and then we'll come back.
Well, I'll just tell you one thing John said. The more beer was sold last month in Las Vegas than ever before in the history of the city. So I think that goes to show you, hopefully, where we're going to go in the next few months.
All right, interesting. John, it was good to talk with him because to get some perspective on hospitality and how it plays into the restaurant industry, those small businesses that are largely the backbone of the economy. Jim, we're going to come back in just a moment. Jim McGreevy, he's going to stay with us, President and Chief Executive Officer of the Beer Institute. I want to talk to him a little bit about the industry, if they're able to access the workers they need to get back up and running and meet the greater demand, certainly as the U.S. economy opens. We'll talk to him about that, and also talk to him a little bit about corporate taxes, especially on that news and expectations from President Biden. In the meantime, let's get back to world and national news. Over to Nancy Lyons. She's in our 99.1 newsroom in the nation's capital. Hi, Nance.
Hey, Carol. The U.S. is moving forward with a plan for sharing vaccines with the rest of the world. White House COVID-19 response coordinator Jeff Zients.
Having successfully secured enough supply of vaccine for Americans, we are donating surplus U.S. vaccine supply and encouraging other countries with surplus supplies to do the same.
Zients says of the first 25 million doses, about 19 million will go to COVAX, which is run by the UN. The remaining 6 million will be directed to U.S. allies and partners. Scores of countries have requested doses from the U.S., but to date, only Mexico and Canada have received a combined 4.5 million doses. Ransomware attacks have crippled U.S. businesses of late. Now the White House has a message for corporate leaders.
Deputy National Security Advisor Ann Neuberger's memo includes a stark warning for businesses to review their continuity of operations plans and update and patch their IT systems regularly. This after cyber attacks have impacted Colonial Pipeline, global meat producer JBS, insurance firm CNA Financial, even a ferry authority in Martha's Vineyard. The White House says it's expanding its cryptocurrency analysis efforts to pursue criminal transactions, and it's reviewing its own ransomware policies. In Washington, I'm Amy Morris, Bloomberg Radio.
Details are being firmed up for President Biden's trip abroad.
Okay, guys, we have to cancel order to sell short Bitcoin. As you can see, it take like for 3 hours and it didn't reach anything. Let's wait for a better time, for another time. So if you placed an order to sell short Bitcoin, as I did, please cancel it. And we will see. Tomorrow, maybe we'll place the order for Bitcoin. Okay, guys, I'll speak to you later. Stay safe.
Well, on this weekend's Business of Sports show, our colleague Jason Kelly caught up with Paul Rabel, co-founder of Premier Lacrosse League, on a variety of topics ahead of the start of the new season this weekend. He's familiar, certainly, to our listeners as well. In this excerpt, Rabel discusses new funding from investors, including New England Patriots owner Robert Kraft.
We think about our business from a product and distribution standpoint. And as a single entity company, it's one of the reasons why we've attracted, we think, the best sports ownership group in North America, and now bringing on the Crafts and Arctos and the leadership that they respectively have across a number of different properties, adding value to ours, is that, Jason, we can make decisions and make decisions quickly, what's right for the game from a competitive integrity and entertainment standpoint. And what we set out to do is think about it both from a product standpoint. So how can we enhance the experience for our players and the competition on the field? And how does that impact our fans viewing? And then how can we distribute it as far and wide as possible?
Yeah.
And so I think for as long as the cable bundle will be around, will be on television, because there is the blue blood mark. There's the validation that you get from being available on television for a sports fan, the top of the household to the bottom. But we're tracking trends quickly, and we want to be where every lacrosse fan is, and that's our strategy around distribution. From a product standpoint, I'll say that lacrosse has been known and dubbed for the fastest game on 2 feet for a long time. But when we looked at the game on television and took an objective eye, on a big field, it's hard to feel the pace from your television, or if you're watching on your laptop, tablet or phone. So if we shorten the middle of the field, maybe we can see kind of eye line, goal to goal a little bit better. We also noticed for non-lacrosse fans that they had a tough time tracking a ball because it moves over 100 miles an hour on a shot. So we changed the color of the ball to optic yellow, which is the color they use in tennis.
That's Jason Kelly, Bloomberg, speaking with Paul Rabel, co-founder of Premier Lacrosse. Catch more on Friday night at 7 p.m. Wall Street time right here on Bloomberg Radio and also Bloomberg.com.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We're watching Lululemon shares after hours. Right now, they are trading a little change. The Lululemon Athletica posted first quarter sales and an outlook for the full year that beat expectations as the company saw a pickup in brick-and-mortar traffic along with strong online sales. It was a down day on Wall Street with the Dow, the S&P, NASDAQ all declining today. Little changed on the Dow. Have been down as many as 265 points. So ended the day down by just about 0.1%, lower by 23 points. The S&P fell 15, down 0.4%. NASDAQ ahead of Jobs Day down 141 points, down 1%. The NASDAQ 100 index today down 1.1%. Investors were digesting a raft of economic data and that report that President Biden may be open to a lower corporate tax rate than 28%. 10-year yield 1.62%. We've got gold down 2%, $18.70 the ounce, and West Texas Intermediate crude higher by 0.1%, $68.88 a barrel. Sources tell Bloomberg Centerview Partners is the latest Wall Street firm throwing cash at junior bankers in an attempt to minimize turnover. One source says the boutique advisory firm is offering $200,000 retention bonuses. I'm Charlie Pellet. This is Bloomberg Business Flash.
All right, Charlie, thanks for the update. Well, Jim McGreevey is still with us. He's President and Chief Executive Officer of the Beer Institute, still with us on the phone in New Jersey. The Beer Institute, the National Trade Association that represents America's brewers, beer importers, and supply chain partners. So really a great snapshot of what's going on in the industry. Hey, Jim, one thing I wanted to ask you, jobs. We get the monthly jobs report tomorrow. Your industry, are they having any troubles attracting workers, especially as the economy opens up and demand ramps up?
We don't see trouble attracting workers in our breweries and in the distribution business. Again, Carol, it goes back to the bars and restaurants, right? Nearly 570,000 jobs lost on a temporary or permanent basis, and you hear lots of discussion around the difficulties of getting people back into those places. And I think we really need to support the recovery by getting those folks back to work. And I think we're seeing that. I mean, our sense is from some of the data we're seeing that the food service in what we call the on-premise, the bars, restaurants, taverns, are starting to come back to pre-pandemic levels. I think we're going to get there, but certainly you do hear from a lot of different corners the discussion around the difficulty in getting some workers. And I think we're certainly seeing that in the bars and restaurants right now.
But we're not at pre-pandemic levels for the industry yet.
No, but, I think we're going to have a big summer for all Americans, and I think for the hospitality industry, and I think for the beer industry. So I'm very hopeful. You just see the economic impact of beer through our Beer Serves America report. 1.6% of U.S. GDP comes from our industry. 2 million Americans owe their livelihoods in one way or another to the production, distribution, and sale of beer. We're coming out of a period where folks were cooped up. They want out, and I think they're going to we're already seeing them sort of hitting the bars and restaurants in this country in a big way, and I think that's only going to grow.
I have to say, some of our listeners and followers on YouTube, I think hearing that you said we're going to have a strong summer, saying, well, I'll drink to that. So responding as the world reopens. Hey, listen, one thing I'm curious about, President Biden said to be offering up to create a tax floor 15% down from his earlier proposal to lift the corporate tax rate from 21 to 28%. So essentially unwinding the tax cuts that the GOP adopted back in 2017. That's what he initially was looking to do. Now it looks like he's backing off of that potentially. I'm assuming your members are in favor of lower rather than higher corporate taxes.
Well, we saw the power of tax relief in our own industry. We are one of the most taxed industries and regulated industries in the country, but we did receive relief from the excise tax that beer pays in 2020 and 2019, excuse me. And we saw the power of that for our industry. So I think it's great to see seemingly Republicans and Democrats coming together, inching closer towards one another on some kind of deal here on infrastructure, which I think will only help support the recovery. You know, excise tax is a tax that we pay that others do not, but the total taxes paid we see in our Beer Serves America report from beer is $55 billion. So we certainly want to see low taxes, but we know in our industry the power of tax relief just in recent years. It's been very helpful to us. So
what specifically, what happens when there's low taxes? What happens to that money? Because we often talk about it with, you know, publicly held companies that you get a tax break. It's not necessarily higher wages or investment in the business. It's often buybacks. So I'm just curious, what happens when there's lower taxes in your industry? What specifically do you see happen?
Yeah, Carol, in 1976, there were 51 breweries left in this country. Today, there are over 8,000. And I can tell you, when we received the excise tax relief over the last few years that we've received, I talked to brewers across the country, large brewers, small brewers, all sort of talking about the same thing. Using that tax relief to hire more workers, to improve their physical plants, their breweries, their tap rooms, you know, their facilities, finding more ways to distribute their beer, innovating more and more. So to me, and we see this, we are an industry that has experienced this over the last few years. Low taxes drives innovation, it drives jobs, and it drives an industry.
Hey, so in terms of innovation, what are some of the kind of interesting, innovative trends that are happening within the beer industry? You know, we were talking on our planning call, and I was thinking about cannabis and beer, and the political environment seems to be opening up in a big way, certainly when it comes to cannabis, more generally speaking. What are the interesting trends, Jim, that are happening right now?
Beer is always innovating, Carol. You know, a few decades ago, light beer was an innovation of its time. Then we saw the rise of the craft movement and bringing back some of the styles that had fallen off the radar screen for a while, particularly IPAs. Today, you see ready-to-drink beverages in so many different ways. The hard seltzer phenomenon of the last 4 years, preceded by the hard soda movement of a few summers ago. That's the great thing about beer. We are always innovating. We want to be where the consumer is. And the consumer right now is looking for more flavor, but also very mindful of health and wellness, calories and other things. So these hard seltzers, the ready-to-drink beverages are really becoming a bigger and bigger part of our industry. Many of them are malt-based. They're made in a brewery. They're made by brewers. That's the kind of innovation you see, and you hear so much about these different hard seltzer brands now. But there's always something new in beer. Beer is an incredibly dynamic industry.
Just got about 20, 25 seconds here. When you talk to your members, the outlook, the economic market outlook, how does it look for the next 6 months to 12 months?
Well, as I said, I think we're hoping for a big summer for every American and for beer in particular. We want to grow those 2 million jobs supported by the beer industry. We want to grow that $332 billion economic input that we have. So, I think that there's always things that can be improved upon. But I think the opportunities for beer are great. I think the opportunities for our country are great coming out of this pandemic period. So I'm very hopeful.
All right. Well, great to check in with you. I really appreciate it. Jim McGreevey, he's President and Chief Executive Officer at the Beer Institute, joining us on the phone from New Jersey. Some optimism, certainly, for his industry. All right, folks, that wraps up certainly this edition of Bloomberg Business Week. All eyes, ears, nose, and toes will be, of course, on that monthly jobs report coming your way at 8:30 a.m. Wall Street time. That will certainly help set the tone and the trade for the Friday session. From the whole Bloomberg Business Week team, I'm Carol Massar. Have a great evening.